partially committed funds as such. I welcome you all to this Amity Innovation Incubators Demo Day, and I hope you would have a great day ahead, interesting opportunities to evaluate. And please feel free to give in your feedback, ask as many questions to the startups as you would like. We have kept a 10-minute window for the presentation and 10 minutes for Q&A so that we have enough buffer time. I welcome you all once again. May I please request Dr. Chauhan, since sir, you're here. Dr. Chauhan is the president for Amity Education Group, but more than that, he's been the pivot, he's been the pillar behind the Amity Innovation Incubator. We've grown from 1 to 17 centers, and the CEO for Amity Capital Ventures. Dr. Chauhan, can we have a few words, please?
Thank you, Ojas. I could not be more excited. My favorite kind of room is this. Amazing entrepreneurs, each one of you on an amazing journey of your own. I know many of you, I know many of your companies intimately well. We have spent a lot of time together. We already have investments in a number of you. So happy to see each one of you. Cannot tell you how excited I get to see the kind of companies you are developing, the kind of innovations you are bringing. And then, of course, we have this amazing galaxy of enablers and investors and people who are really the mentors and the leaders of the early stage ecosystem. Many of you have been so kind and generous with your time, giving your precious time to the Amity Innovation Incubator here in Noida or at one of our other 7 physical locations or across our 16 centers where we enable virtual incubation or one of our 3 international incubation centers. So I'm amazed. Alpeshi, I was telling you, whenever I hear you and the way that you challenge companies, I feel very inspired. Like this, we have so many people, and really I could write a book about so many of the people here. Amitabh ji, you have been part of the Amity Incubation Network now for almost 20 years. In a way, really as an entrepreneur, as a mentor. This is interesting and very exciting that today we are doing this format once again. The last time we did it, it led to great results and outcomes for a number of our startups. One of the successful results from that day is with us, Sahil, who will be moderating and helping us here today. But I feel very proud of you, Sahil, about your journey. When I saw you on Shark Tank, I was feeling very emotional that, I've seen you since much before that, and how a young person with an idea can go forward, and you are really building your own company in leaps and bounds, and I feel proud of it. With that, today is not the day to speak long, but to listen to what we have to hear from our entrepreneurs and startups. I wish each one of the companies all the best, and to those who have come to support the ecosystem and to possibly look at investments. I'm grateful that you are part of the India of tomorrow. I always think $3 trillion we need to add in the next few years to the Indian economy. Where will that come from? You are the enablers and the oil that is going to make that happen. So grateful to each one of you. Thank you so much.
Let me introduce Sahil again. Sahil, can you please come onto the stage? Sahil would be moderating the entire session, but he's our success story from the last demo day, as Dr. Chauhan mentioned. Got the largest offer on Shark Tank, but refused and stayed with us. So over to you, Sahil.
Thank you so much, first of all, Aseem sir and Ojasvi sir for such a warm welcome. And I extend a very warm welcome to all the startup founders and the investors at the Investor Pitch Day. I'm very excited to be hearing pitches from all founders and hearing questions from investors at the same place where I was about 2.5, 3 years back. But even 2.5, 3 years back was not the first time where I was pitching in Amity. When I was 18, 19 years of age, I actually pitched business plans in Amity itself, and my relationship with Amity has been fairly long. And I'm super excited to be moderating this event. Before we kind of deep dive into all the pitches, I wanted to set some ground rules for all founders who will be pitching, and for the investors who will be asking questions before they take a call in the investment. Couple of rules is that we will be spending around 20 minutes per pitch. That is the major ground rule that we have. The pitch will be for around 10 minutes, and I will be probably let them know when they're about 9 minutes there. And on 10 minutes, we'll probably have a hard stop at the pitch. And the next 10 minutes will be around Q&A. And around 7 minutes is what we will try and target that we get done with the Q&As. And the remaining 3 minutes, we'll probably keep them as buffers, right? All investors will have this card with them. I hope you've been able to find the cards on your tables. There are two parts to the cards. I would really request all investors to have them handy. One of the parts is interested, where you raise your hand and probably say that you're interested in the founder or maybe considering an investment in the founder. And the other part is that you have follow-up questions that you'd like to take offline, right? Obviously, important, significant questions that you think the entire room should be aware of and that you'd like addressal. Obviously, they should be asked here itself. But if you'd like to ask follow-up questions above and beyond what you've already asked, you can probably ask for follow-ups, right? And if you're not interested, you don't do anything, right? So you just kind of relax. But apart from that, you will also have a paper or a folder with you guys. Please make sure, I hope you guys have your folders handy so far. Inside those folders, you also have to write whether you're interested, not interested, or you'd like follow-up. The team at Amity, including me, we will be looking at the folder and we'll make sure that you connect with the relevant founders, right? So for example, if you're interested, folks at Amity will make sure that you connect offline by exchanging email addresses, numbers, so that you can have follow-up discussions with the founder, right? So these are the major ground rules that I wanted to state. And without further ado, we'd like to start the pitches. And first pitch that we'd like to call on stage is Wow Mom Foods, which is a startup by Shyam Jha. And with over 23 SKUs, Wow Mom Foods is made of healthy millet and is a perfect alternative to junk fast food. So they're in the health business. In this International Year of Millet, Wow Mom Foods is at the right time, at the right place. And Wow Mom Food takes pride in the fact that it has over 70% tribal workforce as women in their team, right? With an ARR of 1.1 CR, I extend a very warm welcome to Shyam Jha, founder of Wow Mom Foods. Please have a big round of applause for Wow Mom Foods.
Healthy greetings to all of you. I'm Shyama Jha from Wow Mom Foods. So here it is, Wow Mom Foods with the healthy products of millet. We have about 23 SKU, and in fact, recently we have added 4 more, so coming out to be 27. We are having about 10,000 plus customers, back 15 awards in just 1 year. Average ticket size is rupees 350 currently, and expecting a profit of 7% in 22-23. And best part is what right now was mentioned, that we have 70% tribal workforce working with us. So as I said, Wow Mom Foods, So being a millet-based things, and as we are saying, 70% women workforce, and especially in tribal working it, I'll take you through the entire journey, what we have gone through till now. So if we talk about today's world, 74% of the entire world's population has a problem of lifestyle diseases. And we have recently seen how COVID has affected it. So what we need is the healthy lifestyle, but at the same time, people need packaged food. And to add up to it, right now, we are talking about millet, and even the international market has started talking about millet. And as 2023 has been declared as International Year of Millet. If we talk about millet right now, worldwide, India is the biggest producer of millet. But besides that, not only today, about 50 to 70 years back, India, African countries, and lots of European countries were into millet, but with the Green Revolution, things changed. But now, seeing the health as a paramount thing, people are shifting back to millet. So if we talk about our total addressable market, it's huge right now, and we can see the world around. Currently, we started from a small place in Orissa and Mayurbhanj, but in 1.5 years of our journey, we are expanding in India. At the same time, we have put our impressions in some of the international markets like Vietnam, Japan, Canada, then Australia and PNG. So those places our products have already gone, and we are looking at slowly but steady expansion. But this year being International Year of Millet, we want to go slightly aggressive. And as I said, being International Year of Millet, and we are wanting to go slightly aggressive, so the thing has already started. In 1.5 years of our journey, we are already online presence in Amazon, Miso, and other online platforms. Besides, recently, we have started going very aggressive through our website sales. And we have started our distribution network. We are having our own channel, especially in Orissa, already placed. Recently, we have started moving into North, and North we have placed a small distribution channel. We are also talking with modern trade, big giants like Reliance and all, and we are happy to say that we have already cracked some deals. And we are also talking to the places where we majorly see the instant food market, which is coming up. So that is the thing which we are majorly focusing on. Besides, as I was telling, that 74% of the total world population is suffering from the lifestyle diseases. And if you see, lifestyle diseases is majorly because of the lifestyle and the unhealthy eating, the packaged food that we are eating, the junk food, fast food market. The junk fast food market is the biggest market in today's date. So what Wow Mom Food is trying to do is to replace junk fast food market with a healthy fast food market. And that's why our product categories include all those kind of products. Yeah, so these are our products. Our products are specifically targeting the fast food market. We have noodles, we have pastas, we have snacks, savories, cookies. We have different kind of these idli, chila, and dosa powders which can instantly made. So what we are trying to target is that our product should be replacing the packaged food, but at the same time in a healthier way. And we make it a point, we are not using preservative, we are having a baked system of making the product, and the products have jaggery in replacement of sugar. So trying to make it as healthy as possible. But at the same time, we have to keep the taste intact. So we call it as gut-friendly, but guilt-free eating. And I would request my team, we have some of our products, I would request all of you to kindly taste it and let us know how you are liking it. And as I say, talking about millet, we can't miss that the best part about us is that we started 2 years back, but right now, the declaration of International Year of Millet has made us be in the right place at the right time. And for that, because yet we see that at many places, millet is not being that much used and awareness is coming up. Though this year with the government doing a lot about it, awareness has gone to a level, but still we have created some of our ways to make more and more awareness about millet. As I said, lifestyle diseases I was talking about, and we know that lifestyle diseases are happening because of unhealthy food. But there is one more important thing which has been recently seen, that lifestyle diseases can be cured, and we are seeing cases where it's also reversed by eating millet, because millet is having the properties which can help us take care of the lifestyle diseases. So we are providing products which are very much enriched in millet, and that's the way you can at least take one step ahead towards taking care of your own self. Talking about all these things, as I said, we started our small presence in Orissa. From Orissa market, we started our work about 1.5 years back. From there, we started our sampling. We did lots of customer sampling and testimonial. And once we saw that, yes, our millet product is actually working good and people are liking it, we started into the expansion mode, and we went into lots of exhibitions. Those were the initial ways how we started capturing the market. And from Orissa, once we started getting the confidence that people are liking it, we started moving across the country. And in all these endeavor, we were happy to see that we were getting lots of recognition. As I said, till now we have bagged about 15 awards. And in the coming Women's Day, we will be getting our first national level award to add up to our awards category. Besides, we have also been recognized by Government of India, and we have showcased our product in Parliament, and our products have gone to PMO also. So that has also added up to the kind of product we are having, because we are trying to create a shift. Normally people have millet flours, millet idli dosa mixes, but we are trying to create a product which actually matches the today's packaged food market. Seeing all these things, we have started creating into the expansion. From Orissa, we are moving out to the national level markets and all. And we have planned our expansion and already moving into the different sections of the national as well as international market. Last year, May, we did our first showcasing in Delhi, where in the Pragati Maidan, we launched our products. And again, we got a very good applaud over there. And from there, our journey towards the national market started. If we talk about our revenue stream, we are not leaving any kind of stream untouched, because being International Year of Millet, we want to touch all the revenue, all the possible revenue streams. So we are into the
last 2 minutes.
Okay. We are having our website present also. We are looking into the modern trade as well as into the distribution model. We are trying to create all the kind of revenue models. And milestone-wise, we have already covered our first milestone. We have crossed about 25 stores. We are already having across Orissa. Now we have started moving into Delhi and other markets. So we have started going into the retail platforms. Website, we are already there. But by March 2024, we want to have an impression across 500 stores. For there, we have the plannings, because we have already signed an MOU with Reliance. We are having talks with Food Hall there. In HNI, there are 10 stores. We are having going to have our presence. And we are collaborating into the distribution models and other modern trades also. So if you see the current scenario, as the studies say, right now 750 CR is what is the projection of the millet market in today's date. If we see our presence, we are just looking at 10 CR, what we want to bag with us by this year. And seeing this, we are keeping our projections as about 100 crore in 5 years. And for this, we have the complete retail and the modern trade chain, which we have accounted for, and the distribution model. So saying all these things, we are looking at, we have a complete, as I said, with all these things, we have created the marketing strategy and sales strategy. With all these things, we are having an ask of 2.5 CR at 10% equity. And our main usage is we are having our factory set up. We want to do the expansion of that and into the market promotion and the operation part. This is our team. We are having
time is up, Shyama, so we can open the floor for questions. All investors will have a mic on their tables, so they can ask the question. So they can probably raise their hand and ask the question. I'll probably, maybe by show of hands, I'll probably just point out who can probably ask the question and take it forward. Please. If anybody faces issues with maybe switching on the mic, there is a tech team around, so you can ask your question.
Can you just take back to the financials? Projections, which are financial projections.
So this.
Let him close that. Pop up on your laptop.
Something is coming on the screen.
So you said you have 23 SKUs, and how large are these SKUs?
23 SKUs is currently we are having. As I said, in this juncture, we have created 27. We are looking at 50 SKUs in total. We have the recipes and everything set. We are gradually going to launch it. We are also looking at instant noodle and kapo noodle, which we have the systems ready. will be launching it.
23 SKUs would be how much of investment at this point of time?
Sir, I couldn't hear
How
you.
much of investment goes into
To make the product. So product line is already there. We are already.
no, go ahead.
So product, we have the complete R&D and the machinery ready for 50 SKU what we are talking about. That is already there. We don't need, currently whatever we have the setup, we don't need it. So we are MSME 4.5 CR grant organization where we have got the complete initial setup funding from them. Now we are looking at the expansion part for which we are looking for the funds.
And the projections out, I'm just asking questions just to understand. The projections out here are these all projections for the coming years, or are there any actual numbers also? Do you have any actual numbers?
This is national.
Year 1, year 2 are actuals?
This is the projection, sir. Yes.
Do you have the actual numbers for the past 2 years? Of what have you
Actually, sir, like this year we'll be closing with 1.1 CR.
Okay.
We are already crossed 89 lakh. We will be closing at 1.1 CR.
And you have what certifications do you have from the FDA?
So we have for factory level certification. We have all FSSI. We have with us, and compliances wise for national transaction we have all. Internationally we are right now doing trading, but we have already started doing the compliances for that also.
Right. How big is the team today?
How big?
How
Team
big is the
size.
team today?
So team we are having in factory we have a 65-member team. 3 shifts they are working, and as I said, that's completely a tribal base. It's in the village area where they are only doing. They have been trained and they are doing it. Besides that, we are creating sales team in other different parts of places where currently we are having about 20 people team for that.
What's your competitive advantage? Why should consumer buy you?
So that is what right now what we have seen. South is doing more of idli dosa things and all, and cookies is there everywhere. There are other people who are majorly into flour or grains. We are coming out into the products which is current days packaged food products like noodles. Then we are coming up with cup of noodles. We have instant noodles. We are coming up. We have pasta. So we are trying to come up with a range which today's date packaged food industry is majorly into, and the junk food market is into.
But that's your outlook. I'm saying, why should consumer buy?
So
What's consumer logic?
So consumer is buying more of those kind of products because that is their daily need.
Okay, suppose if I were to compare a normal pasta to a millet pasta which you would be producing, what is the price difference?
So price difference is there. It will be about 80 rupees difference.
So normal pasta will be
about
X rupees and yours is 80 rupees more than that.
More than that.
Is 2 times index, 3 times?
Yes,
index?
sir, it will be 2 times. Because not 2 times, about 1.75 times. Because millet is at a costlier side right now.
One last question. Out of your 1.1 crore revenue today, what product sells the maximum?
So maximum we have chunks and wafers. We have chips and chunks. These 2 goes the maximum. Besides our choco chip cookies, noodles and pastas follow the suit.
So these chunks and chips are how much of your business?
How much of the percentage business? It will be about 70%.
70%.
So,
Thank you.
sir. Yes, ma'am. Sir.
Yeah. Going forward over the next year or 2, your bigger play will be online or offline?
So what we have seen, online market goes, but online gives a visibility, but revenue wise, offline goes better. So we want to target on distribution and retail chain. And I am an ex-retail, sir. I have a 20 years of experience in retail. So I see offline goes very good, especially modern trade is going good. So I would definitely concentrate on that too.
Follow-up question on what earlier gentleman was asking. We are talking of eatables here, where people are a little more concerned what goes inside their body.
Sir.
And they like to go for a known brand. In the product that you are showing, there are known brands available, may not be in millet. How difficult will that be for them to introduce the millet range and compete with you?
So I just missed your first.
Yeah, talking of when it comes to eatables, people want to go for a known brand, and known brands do have products similar to yours, may not be millet. How difficult will it be for them to introduce millet in their product range?
So it shouldn't be a difficult aspect for them, but they already have a value proposition which they are playing with. Which when I was discussing with some of the brands like Reliance and Patanjali ITC, they have a value proposition which they want to play with. That is a difficult part where they are having the thing, because we have been discussing and they wanted us to come in white label with them, but the pricing wise they wanted it very low. So that was a thing which I discussed, and I could make it out that they don't want to divert from their pricing fact, which they are having at a very maida and chips wala jo price bracket, and they don't want to go beyond that. They will be coming up with 1 or 2 products because government is very much behind them, but not more than that. So.
Thank you.
So I wanted to ask you, what is your ideal target customers or ideal customers? Like, how do you define him? Is he going for health? Is she going for taste? What is it that the person who is buying your product is looking for?
So my target customer is completely people who want to eat out of packet.
Out of packet?
Out of packet. But they are looking for healthy alternatives. And right now, it's a huge market.
So in that sense, apart from being it maida, the other thing which bothers people, at least it bothers me, is the kind of preservatives which are added, which may be harmful. So what are you doing about that?
Currently, we are not using any preservative. That is why we just have 6 months of shelf life. For international market, they are asking us to come with 9 to 10 months of shelf life, but we have not been able to crack it yet. So currently, we are without any preservative.
Okay, and you're advertising it. You're telling people about this.
Yes, yes. Okay. It's very much mentioned.
Okay. Secondly, what is your repeat purchase? What is the pattern that you're seeing?
Ma'am, we see that whosoever try our especially cookies, one thing then people come to know that it's millet based and it's so taste wise also it's okay to match the taste of the normal maida product. People are coming for the repeat buys and all. And especially they are feeling happy that their kids can have such kind of products. And especially we see in noodle pasta, people are feeling very happy that we are able to feed our kids noodle pasta, but yet in a good way.
So again, going to something which, he asked, is even Maggi, which is very popular, but when they introduce, let's say, whole wheat or whatever other variant, that falls flat. It's not...
Ma'am, we can't conquer those maida market. That's why I have taken the market which is completely millet market right now. And that is where I am moving with. Because it's difficult to conquer the Maggi market.
No, absolutely. That is why I'm asking that. How many people do you think that?
So, ma'am, when people are having 5 days of Maggi, 2 days some other products, that's where we are targeting the customer.
Okay, thanks.
Shama, we can wrap up the questions now. We're 10 minutes past. Great. Thank you so much to all the investors. They can ask the questions offline as well. You can come here. So now, as I probably discussed, by show of your placards, people who are interested can raise their placard and say if they're interested. Do we have investors who are interested so far? Okay. Investors who need follow-up questions and would like to discuss things offline with Shama can raise their placards. Okay. So there are 3 investors who are interested and 2 investors who would like a follow-up with you, Shama. Big hand for Shama, please, guys. Please, can we have a big round of applause for Shama? Great. Next startup that we have with us is Digilux Healthcare. Digilux Healthcare is a dedicated healthcare data tech company that is catering to over 85,000 students across 35 schools and is currently on 11 million data points with an ARR of 1 CR plus. They're operationally break-even and are now looking for hockey stick growth, which is why they're here with us and are looking to raise capital. We have with us Sushant Sharma, who's the founder of Digilux. Can we have a big round of applause for Sushant, please? a quick note to all founders, please have a look at that side of the room where I'm seated. At the end of 7 minutes, I'll probably raise a flag that you've crossed 7 minutes. That is a soft stop for you to know that you might want to consider wrapping up your pitch. And at the end of 10 minutes, I'll probably call things out through a mic itself, so you know that there's a hard stop. And same thing would be around the questions as well, that at around 7 to 8 minutes, I'll probably maybe raise a hand and let you know that you can only take 1 or 2 more questions, right? Sushant, the floor is yours. Can I have mic?
Good morning to all the August gathering sitting here today. I am Sushant Sharma, CEO of Digilux Healthcare, and we are a health tech data company which acquires data from the actionable insights of the students in the school. We are probably the only health tech data company in the country today which has a negative cost of data acquisition. There are a lot of pain points in the schools today which are there due to National Education Policy guidelines, CBSE guidelines, where they need to conduct health camps in the schools, counselings, curriculums, etc. And for that, most of the schools are not compliant today, and they are trying to be compliant. So for that, they are, onboarding multiple vendors for different services. And, all these different vendors which they are onboarding doesn't have a seamless integrated dashboard or platforms from where all the services can be given through one platform to all the schools. So that is one of the very big pain point which schools are following today. And when I'm speaking right now, Tier 1 schools today have more advantage over Tier 2, Tier 3, because Tier 2, Tier 3 doesn't have a healthcare system at all. Going forward, absence of digitization of records, absence of actionable insights which can be captured is the biggest drawback today. So what does National Education Policy and CBSE states? National Education Policy says that you need to conduct health camp once in a year in your school premises, correctly check roughly 20, 25, 30 odd data points of each and every child and record it. Upload that during e-health card onto the CBSE's platform during LOC submissions every year. There has to be a mandatory curriculum which has been given by CBSE, and that has to be inculcated. There has to be counselors, there has to be seminars on specific topics like no to tobacco, first aid, etc., and nursing and doctor staff in your triage or infirmary. So actually all these points needs to be covered by the school. And this is, as far as we understand, this is the total addressable market where 250 million students are there in India today. Our average ticket size is somewhere $2, which is $2 a student a year, and which comes out to be a $500 million market. We are eyeing right now 10% of this market, which is roughly $50 million market. And once we have the enough data points, captured through the actionable insights, we would be going ahead for clinical research, healthcare, and fintech to provide the data and to take it forward. So what does we do exactly, and what does Digilux is all about? Digilux Healthcare provide end-to-end complete solutions to the school, which is a one-stop solution where school need not to onboard multiple vendors, whether offline or online. We conduct health camp in the schools where our team of doctors goes into the schools and conducts roughly 60 parameters of each and every child, from general examination to ENT to dental to vision to vitals. And this year we have added girls' health and hygiene too in that, seeing past requirements of the school. So all these things we do, we generate a e-health card of each and every student and a printed health card which is on the table of yours. We give this to the parents, and then parents can have the predictive intelligence through this health card. At the same time, schools also have the predictive intelligence saying how many number of students have which problem related to dental, related to BMI, related to any other aspect which has been checked by our doctors, and we provide them solutions regarding what diet plans needs to be taken and all those things onto our mobile app, which is given to each and every student. Then after that, we provide school platform, students mental counseling. It could be one-to-one counseling. It could be group counseling for the students which have been identified by the principals or anybody there. Then after that, there are health insurance which we provide. So we have already tied up with Aditya Birla Group for the same, and we provide the insurance, accidental insurance for students in school and school bus, and we customize the insurance to as per the requirements of the school. Then after that, your triage, school medical room. That is again one of the core areas where today school captures each and every data on a register. And most of the school doesn't even know that मैथ्स के पेपर में मैथ्स का पीरियड बंक करने के लिए एक बच्चा मैथ्स का पीरियड 4 बार या 6 बार बंक करके उस ट्रायल्स के अंदर लेटा हुआ होता है just because they don't want to attend that period. Our predictive intelligence shows that this child has been bunking this period too often and she or he might have a problem, but most of the cases parents पहले अपने आप समझ जाते हैं कि क्यों वो बच्चा इतना ज्यादा कर रहा है. We are the first one in the country to come up with a health and wellness curriculum this year. I'll show you in a picture ahead. It has been launched by Shri Salman Khurshid ji. In one of the events in Delhi World Public School, which have been onboarded recently. We are intending to come up with a student e-health diary, which has been in line with the data points which we are collecting right now. Unified e-healthcare platform is the next thing which we are building right now onto our mobile app, which can be given to parents and to the students, through which they can probably have all the healthcare related facilities on one go. And once we have the enough data points, insurance and pharma companies are the ones whom we can, tell them that what all policy points and price points can be availed by them for the people. This is how our health card looks like, which I've already shared with you. This is our health curriculum. So what we have done is we have divided our curriculum into 4 parts, which is one for toddler, one for 1st to 3rd, 4th to 8th, 9th to 12. And every book has 8 chapters, where every chapter has a separate story and there's an activity related to it. And the best part is we are soon making it gamified, because today we feel children needs to be more fit. Because what the parameters which we are saying, there are more than 35% of students every school who are having some of the other problems. And while we make it gamified, they will have more fitness related goals through their mobile app. We are standing at a very good market intersection today, where there are a lot of compliances which needs to be followed. Health camps and actionable insights are part of it. And the data which we are getting through predictive tech and platform is the way forward. We have already captured more than 10 million data points of the students today. We are going forward for 200 schools and 200,000 students. We have already set the predictive intelligence for BMI, dental, vision, and all these points and many more are there in the pipeline. Sure. And data clubbing is there. We have already captured 10 million data points, which I have just shown you. We are right now on 30 plus schools agenda, and we have a total contract value of more than 70 lakh rupees. We have a net profit of 40%, and we are break even right now. As far as milestone is concerned, we started in April 2018. 2020, there's a healthcare policy which came, and in we are right now aiming for next round. We raised our first round in January 2019. I'm an MBA from University of Wales, UK, and I pursued this idea while conducting my thesis on national health services in UK, seeing the data digitization and the trends there. Varun is the CTO and co-founder. Then we have Dr. Barun, who is heading the medical services. Patricia Singh, with more than 40 years of experience for seminars and counselings, and people who are advisors on board for tech and medical services. So what is our fundraise. We have already raised 80 lakh rupees at 2.5 crore valuation when our revenue was 7 lakh rupees in 2019. Today, we are asking 1.5 crore at 20 crore valuation when we are at 70 lakh rupees of revenue, which is approximately 10 times of the revenue which we raised our first round at, and 10 million data points which we have captured today. We already have commitments worth 80 lakh rupees, 40 lakh rupees under METI, 30 lakh rupees from Indian Healthcare Angels. Dr. Vishal Gandhi has just confirmed me yesterday night only. And last 10 lakh rupees we have from one of the angel investors. We are going to spend 35% each in tech development and geographical expansion and 15% each in business development and ops. We stand out from our competition because of the technology, number one. Second is the price points on which we are playing right now. And the third is the tier 2, tier 3 is going to be the biggest game changers. This is the mega opportunities which we have received. Delhi World Public School with a contract value of 87.5 lakhs is in negotiations right now. Manav Rachna groups we are already discussing. Day before yesterday only I have tied up an MOU with NISA, who has approximately 1 lakh schools and 2 crore students. And they are saying that 5,000 schools could be an approximate, area where we could start.
Time is up, Sushant. So we can open the floor for questions now. Sushant, you can start taking the questions from the investors.
Sure.
Yeah, hi Sushant. So can you just tell me, what's your pricing? So 350 is what you've quoted, but with, the DPS World School, what's your pricing per individual?
Sure. So our pricing range starts from 150 rupees and goes up till 700 rupees. We customize our price point as per the requirement of the school. So if it's a school in Jammu whom we are serving, it may close in 150 rupees because they only want a one health camp to be sufficed for CBSE staff. But there are schools like GD Goenkas and others and in Delhi who goes up till 700 also. But taking an average figure, it comes out to be roughly 200 rupees or 220 rupees.
And your margin on that is what?
40%.
Okay, and you talked about sort of actionable insights for parents. What would those be? So
it was actionable insights of students first, and then now what we have done is we have onboarded parents onto our mobile app, where in one account, mother, father, and siblings, 3 more accounts can be operated. So they can upload their own actionable insights. Their parents can upload their own actionable insights onto this platform and share it with their doctors. Their vitals can be shared, and all those things can be managed through our platform only. So now what we are trying to do is we are trying to onboard the entire family, not only one student.
Okay, and one last thing that I wanted to ask was, you showed 200, I think when you did your market sizing, you looked at 250 million children.
Absolutely. Yeah.
Right? But this is mandatory for CBSE only right now. So what is really...
it is mandatory by National Education Policy and 2020, which essentially means all the schools, whether government, whether private, whether semi-government, they need to do it.
Okay. All right.
Thank you. This slide, I had created yesterday only just to give a glimpse that what all schools are having and what all we are giving in terms of technology as well as offline. Please, sir. Yeah.
So what have been your early successes in getting cross-sale or revenue generated on this data?
Sorry, sir.
What has been your early success in getting revenue on this data?
So, sir, we have not even started to monetize the data as yet. The data is the thing which we are capturing. Now is the point when we are, expanding our mobile app, bringing, e-pharmacies and other things onto our mobile app for the cross sale. And till now, we were more focused on getting the data first in the company, having more students onboarded in the company, and then provide them all these things onto our app. And, gaming is one of the things why we feel the parents would be more interested, in terms of gaming app and exercises like anger management, stress management, and all other things.
No, but what according to you is your vision of where will the biggest revenue come from?
Sorry, sir?
Where will the biggest revenue come from data monetization?
So biggest revenue will come from the e-healthcare platform that we are building right now. And once we have enough data points, then all these pharmaceutical companies and the fintech companies whom we can propose that the preventive condition of a child is this, and they can have their price bands according to it. So that the data in future will come from there. But today, if you ask me, in coming 3 years from now, the most of the revenue will come from the e-healthcare platform that we are building. Thank you, sir.
Do we have any other questions?
Yes.
Yeah.
Hello.
Yes, please.
So this data monetization, so there will be privacy issues. So how you will handle that?
So as far as data monetization is concerned, we are not going to sell the data of the children in terms of numbers and other things to anybody else. The idea of data monetization is the data which we are capturing through actionable insights. And once it comes to a number, decent number, then we can probably, like a white paper comes out of the data which you capture. So similarly, we are going to come up with our thesis that these are the data points which have been captured, and categorically these many number of students, from these many number of students, and this area has these many problems. So this is the idea of the data capturization. The idea is not to sell it in the market.
Right. Thank you.
Thank you very much. So
this MOU signed for?
So this MOU has been signed for roughly 5,000 schools right now. They already have 2 crore students onboarded and 1 lakh schools. We are already going on 20th of February, which is a few days from now. They have an event in Chandigarh where more than 500 schools are coming of Punjab and Haryana. So what these guys have told us is we are holding events every month, and we are going to be inviting you and giving you access to all the schools who are going to be coming in that. So due to that, we get a leverage that we need not to go and knock the doors of each and every school, because school today in itself is a very long process to crack. I always feel, seeing 4 years till now, schools can only be cracked through fast. Schools can only be cracked fast through events, seminars, or through one-to-one connects or word of mouth. These are the best ways. So that is the reason we are in the MOU with them.
This is the entry point.
Absolutely, sir. Absolutely. Thank you. Thank you very much, everyone, for your patient hearing. Thank you very much.
Thanks, Sushant, for a wonderful presentation. Now we'll move on to folks who are interested or would like follow-up questions. So first of all, we'd like to have investors who are interested in the pitch raise their placards if they're interested in the pitch. So we have one investor who is interested in the pitch and would like to be follow-up. People who have follow-up questions and would like to discuss things better can raise their placards high. Would really appreciate if you can keep your placards high so I can see. Okay, so a lot of people have more questions that they'd like to discuss, so you can definitely take them offline, Sushant. Great. So next presentation that we have for today is T-Assets. T-Assets is a supply chain fintech company that uses blockchain to finance current assets of MSMEs. It has already transacted over 2 CR via blockchain, and it is enabling supply chain to optimally utilize the entire grade A vendor credentials, right? We have with us Amit Mahajan, the founder of T-Assets, who will be presenting next. Big hand for Amit Mahajan, please.
Good morning, everyone. I'm Amit Mahajan. I'm co-founder of T-Assets. We live in a world which is highly volatile. I mean, as we call VUCA world, post-pandemic and recently because of the geopolitical tensions, the supply chains are getting disrupted. So the CEOs are now not just thinking about the immediate supply chain, Rather, they want to ensure even the deep tier suppliers or dealers are also under control. And hence, we came up with this technology, FinTech, wherein we are ensuring deep tier discounting model so that the MSMEs, which are a tier 2 or a tier 3 vendors of the OEM, they also get enough funding. We have brought up this solution on a blockchain, and we also have a patent for same. As I mentioned, I'm Amit Mahajan. I'm co-founder, chartered accountant and MBA by qualification. I've been a corporate banker throughout my career, over 16 years, expert into corporate banking and SME.
Hi, I'm Dhruv Bajaj. I have around 16 years of experience. I'm an engineer plus MBA finance, and I have worked for around 15 years in multiple banks, NBFCs, and fintechs. Before actually conceptualizing this company, I have experience in SME credits and supply chain finance. We have another co-founder, Mr. Harinder Singh, who is a computer science engineer. He himself also has 16 years of experience in multiple IT companies and worked for reputed companies like Wipro, Deloitte, and Emerson. He is one of the known faces in enterprise blockchain. See, so the problem what we're trying to solve is how we can unlock the cash flows of MSME suppliers. And one of the best ways to do that is through invoice financing, because these MSMEs do not get paid on time. Typically, the corporates or mid-corporates pay them after 30 to 90 days. And that leads to an invoice finance opportunity in India, which is roughly around 5 lakh crore opportunity in India. But having said that, even with multiple fintechs coming to the domain, multiple banks doing the invoice discounting, and bill discounting being a very old product, still around 70,000 crore is the total volume of invoice financing which is right now happening in India, with the total addressable market of 5 lakh crores. And there are 3 key reasons what we observed as a banker when we are working on that. First is financial institutions are not willing to underwrite credit, which are raised to a well-rated anchor only. So if you have a tier 1 vendor, and the problem with India is that most of the MSMEs are not direct suppliers of these large corporates. They supply to an aggregator or they supply to a tier 1 vendor who then adds value, and then he supplies to a large corporate. So these aggregator, this tier 1 vendor may not have very good ratings, so these invoices do not get timely financed. And that leads to a cash flow issues into a lot of MSMEs. And also anchors, buyers do not want to commit the full invoice value upfront. And what we are trying to solve is how we can kind of remove the pain areas of tier 2, tier 3 vendors in any supply chain. Can I use this mic? This mic is working? Hello? Okay. So what we came up with something called as invoice credits, and we call it as MSME credits. We converted invoice raised to a large corporate into tokens on a blockchain ledger, and we tried to move those tokens downward in the value chain so that anyone who is an MSME in a supply chain can get financed through these tokens. I'll try to explain this through a simple example. Now let's assume we have a large corporate which is an OEM. He's being supplied to a vendor who is a tier 1 vendor, and then we have a MSME sub-vendor who is supplying to these large corporates. On day 1, let's assume that this vendor raises an invoice of 10 lakh rupees to the large corporate. The moment the OEM accepts the invoice, on the TSX platform, we convert that into 10 lakh tokens. And these tokens get transferred to the vendor wallet. Now let's assume this MSME sub-vendor has raised an invoice of 7.5 lakh rupees to this vendor. The vendor against this invoice can transfer 7.5 lakh rupees equivalent tokens to this MSME supplier. And now this invoice credits, or indirectly these payment credits, are now transferred from OEM to MSME. Now the bank is much more comfortable to give finance against these invoices at the credit rating of the OEM rather than the credit rating of the bank anchor. So he can go to the bank, request for a discounting, and the funds get transferred to this account. On due date, when the bank pays, hello, am I audible? Yes. So after 90 days, when the bank pays, settlement happens on the linked escrow account. 7.5 lakh rupees goes directly to the bank who has actually financed MSME invoices, and balance 2.5 lakh rupees goes to that MSME vendor wallet. Now, what is the benefit which we are getting from this? On the left hand side, we can see what is how traditional invoice finance happen. This leg, the direct leg, which is tier 1 vendor raising invoice to the large OEM, that easily get financed by traditional banks and NBFCs. But the second leg, which is tier 2 vendor invoices, either do not get financed or they get financed at a very high rate of interest. Through our solution, the entire supply chain can now get financed at the same ROI. So what are the benefits? For the OEM and tier 1 vendors, there is a direct saving in procurement cost by 2 to 4%. It leads to reduction in the supply chain, as Amit has already explained that there are a lot of supply chain disruptions which happens because of various geographical factors. And it also acts like an off-balance sheet procurement lines for these large corporates. For MSMEs, it directly unlocks their cash flows and also reduces the overall interest cost substantially. For lenders, why do banks and NBFCs come on the platform? Is because it gives them the priority sector lending benefits for lending to MSMEs, and they are meeting their dedicated RBI targets for meeting the priority sector norms. So it is a win-win situation for each of them. There are other select use cases like sub-vendor credits, SCST credits, metal credits, and green carbon credits, which we have kind of envisaged when we saw this, actually went live with this program. We are already onboarded 3 lenders till now, RBL Bank, Tata Capital, and Ugro Capital. We are under onboarding discussions with
3 minutes
multiple
left for the
more
pitch.
banks.
3 minutes left for the pitch, sure.
6 more lenders on the platform. Okay, you can take it.
In terms of traction, we went live in the month of October with initial sanction, which we secured of 16 odd crores. Till last month, we have secured lines of sanctions of 50 crores. Those are on anchors. And we are in the process of, onboarding the vendors and sub-vendors. We have already secured invoice rotation of around 2 crores over our platform. Our March 23 target is to get a sanction book of around 75 odd crores and volume of around 10 odd crores. We secured. We did a last small fundraise in the month of February 22. That was around 47 odd lakhs. That has been getting deployed majority into technology, which is now in place and up and running. We are seeking 2.5 crores from this round, and we have already secured soft commitments of around 60 plus lakhs.
So if I were to summarize why consider T-Assets, first is that the solution itself is very unique. It is 10x better than any other solution actually available in the market. The technology is patented. We have got the India patent granted for this technology. The solution actually creates a network effect that buyers onboard the sellers and sellers onboard their buyer automatically on the platform. In terms of team, all 3 of us have our domain experience. I have experience in supply chain finance. Amit has experience in corporate banking. And Harinder, who is our 3rd co-founder and CTO, has a good experience in enterprise blockchain and banking ERPs. In terms of business expertise, we have experience in the past to set up businesses, large-scale businesses, while working in multiple large organizations. The opportunity in terms of deep tier finance is pretty untapped. Very low penetration has actually happened in deep tier finance so far. And if you talk about invoice discounting opportunity in India, it's about $5 trillion book potential is what people envisage, and about 70,000 crores is only being captured by banks and NBFCs together. Globally, also invoice finance is a $12 trillion book potential, which is a nearly large TAM to be addressed to. Presently, there is no major competition in this segment. There is only one other player, Nakad, who has come up with a similar solution. But our solution in terms of technology can also take care of variable tenure invoices, for which we have been granted patent by India Patent Office. So technology-wise and team-wise, we consider that we are slightly better.
The time is up. We can now open the floor for questions.
We are also. So these are our accreditations. Thank you.
Yeah, I have a question here. Yeah, so I understand that you are creating a value chain and the factoring is done from the credit worthiness of the OEM here.
Correct.
But 2 things. One on the revenue model, where is it on the disbursement or is it on the grant of the loan from the bank that you will make money? And second is, are these contracts smart contracts? Because it is not about the tier one signing with the OEM. It is the supply side also that it is delivered in time. So how do you ensure that the whole chain is working properly?
Okay, so revenue part, I think Amit will take care. But in terms of the second question, let me answer you. So basically, what we have done is we are hashing the invoices on a blockchain network. That is first part. We are securing the raise and acceptance of the invoices on that network. That is one part. So bank is typically financing an invoice raised to the next anchor, next supplier. So that is legally, that is what banks are typically doing right now, but they are getting a cash flow comfort from the large corporate. How we are routing it? So for example, if we have a tier one vendor, we create a virtual escrow account for a tier one vendor. So the anchor pays to the tier one vendor, but the money comes to their escrow account. And from there, based on the token outstanding, the money flows either to the tier two vendor or to the financer of tier two vendor. In terms of revenue model, I think Amit can.
So we have twofold revenue model as of now. One is obviously SaaS solution, which we are offering, and we are tying up with either corporates or banks for that. Another is purely we are acquiring customers and then getting those deals done by the banks. In this particular model, yes, as you rightly mentioned, we charge at the time of disbursement in terms of processing fees, which is around 50%. That is what we have tied up with the existing banks as of now. And we also charge few bips on the overall flow of the transaction through our platform. And in few cases, we are also sharing NIM margins with the banks or the financial institution.
How does one discover this app? I mean, like if I'm in need of funds, I need funding. How do I discover it? How do I discover this app? I mean, what have you done for the marketing? How do you market it?
So basically, we are targeting anchors. We are the first job was to onboard lenders on the platform, which we have already done. We have Tata Capital, RBL Bank, and this. So we have right now two kind of strategies. One is that we are going to the bank and we are saying you have existing set of large corporates which are already your customers. If you want to finance their value chain, you can use my tech. That discussion is going on, and then you can finance that where I will earn as a SaaS fees. Second option is we are also targeting, we are going to the anchors and we are saying, okay, we are helping you to ultimately reduce the procurement cost of the entire supply chain. If you want to finance your suppliers or sub-suppliers through this and earn some better treasury income or some cash discounting from those vendors, you can actually do that. So our strategy right now is actually going twofold, going to the anchors, going to the banks.
Physically?
Right now physically, but
how do you
that is what our strength is as well. I mean, if you see in the last couple of months itself, we have secured sanctions of 50 odd crores, because that in where we bring our experience of corporate banking and supply chain. We have done it in the past for donkey's years. I mean, meeting all the large corps. So now it is time for them to extend the favor, and we are reaping that reward for sure.
So if I understand it correctly, you're working on the database which you have gathered or collected out of your experience and then using that database.
Yeah. So
is that what you're doing? The target audiences does that, the borrowers. How will the borrowers discover there is something like this which I can?
There is enough. I mean, our target audience any which ways is a large corp. And then, they suggest their vendors and sub-vendors which trickle down, right.
So it's a top-down approach.
Correct. Yeah, for the acquiring piece, it is top-down approach. For the SaaS solution, I mean, it is either banks or.
That's right. Thanks.
So that is.
Can you tell a little bit more about the patent? What does it cover? What is the nature of this patent?
So when we actually move invoices in a value chain, and if we want to do double invoice financing, the challenge is tier 2 vendor raise an invoice to tier 1 vendor, that could be of 45 days, and tier 1 vendor raise invoice to do tier anchor could be of a different tenor, 60 days. The patent is how to first take care of that variable tenor invoices, and second is how this entire tokenization product happens, and then how through these tokens banks can get financing. So this entire for this entire process we have got a process patent from India Patent Office.
Okay, we can follow up on that. The valuation I did not catch. You're looking for 2.5 CR at what valuation at the moment?
So we are looking to dilute around 10%.
10%. Can you tell next few years, what are your revenue projections?
So we look at from the point of view of what would be the outstanding book. So for this year, so for March we have targeted 75 odd crores sanction book. We have already secured 50 crores and a few deals are in pipeline. So this will be done for sure. For March 24, we are targeting 300 crores of sanction book. Being conservative bankers, we are assuming that not more than 20% of a sanction book will get utilized at any given point in time. So 60 crores of outstanding. A loan will be standing, which by virtue of say 3 months ticket size will be there. So it will get rotated at least 3 times. So hence we have projected a transaction volume of around 180 odd crores. So these are pretty conservative numbers.
Just to understand what is the revenue for you, for the company that you
So revenue for March 24 basis 180 crores of this thing would be close to 3 odd crores.
3 crores.
Yeah, this is purely on the acquisition piece. We have not factored in, just in case we click some SaaS solution kind of a piece and all. We have not factored in those as of now.
I have one follow-up question. So the real problem is at the bottom of the pyramid because the credit worthiness of the lowest strata is the most difficult part and they are facing the working capital issues. Now when it's almost like the cycle stand, if he defaults, everything gets defaulted. So does the bank keep anything as collateral or is it this whole contract is also under the insurance product where in case of a default, the bank doesn't have to write off that as an NPA, which is the same with the CGT MSME scheme, which the banks give to the MSMEs.
No, so the beauty of our model is that the payment is coming from the anchor, right? Which typically in the banking parlance, we assume that it is a good rated anchor and there would be a less, we can never say there wouldn't be any default.
If you can go back to that slide, the depiction slide, which had those arrows and markers. Not this one, this is the previous one. Yeah, this one. So once the 10 lakh payment is triggered, okay, once the first invoice is raised, the end person gets about 7.5 tokens credit, right? That's the understanding. Does he monetize this right away because he is in the crunch of delivering the contract in the first place?
So that is why it is actually good. So that is why what you said is once that 7.5 lakh rupees credit comes, he can go to the bank, bank is already there on the platform. They can finance it. The lines are already issued to them.
So if I'm at the right at the bottom of the pyramid,
correct.
I get these tokens. I go to the bank, monetize it. The bank holds these tokens as the security.
Absolutely.
And
so bank becomes the owner of these tokens, and on due date when the money comes from the linked escrow account, banks settle their outstanding invoices which are financed.
So in case of delay in payment or it is T60 or T30, which is the NPA rule of delinquency, bank will chase the last guy or the first guy?
Bank will obviously fund.
The borrower actually in the books of the bank. That is more of a off-balance sheet financing for that.
Got it.
But yeah, it is predicated on his risk, which we all assume is a good risk.
So have you done this also? Are you looking for an insurance on this product? Because in case of a default, who bears the NPA?
So in case of insurance, the cost of insurance will kind of slightly increase the cost of finance. What we are ensuring is that we are only targeting those OEMs who pays their suppliers on time. But the problem, a lot of time the problem happens that these vendors sometimes delay their sub-vendor payments, or since they wait paying these sub-vendors till the time they get payment from the large anchors. So वहाँ पे एक cash flow issue sub-vendors को आ जाता है. That is what we are trying to solve through this tech.
Okay.
Yes. Okay. I thought I had some questions.
While assessing the limit, bank is assessing a softer comfort on the OEM itself. They run a program on the OEM. And they assess whether it is a credit-worthy OEM to be...
Managing. अब सब होगा मोबाइल पे. सारे channels पहले 30 दिनों के लिए.
So they assess whether it is a credit-worthy OEM, and hence, they underwrite borrowing line on the MSME. Yeah. No. How will MSME default? The money has to come from OEM. If the OEM doesn't pay, then only this guy is defaulting. He has already taken his money on the day zero, right? Today he gets the token, he raises the invoice, OEM accepts the invoice. Once he is accepting the invoice, then he cannot renege from his responsibility कि मैं पैसा ही नहीं दूंगा. आपने invoice accept किया था, आपने due date पे पैसा तो देना ही है.
Right.
But
just to add to that,
security नहीं है मेरी कोई. मतलब OEM का comfort is the only security.
Obviously, I mean supply chain financing works on this premise itself. अगर वो security हुआ, then तो it is a secured model. I mean,
see OEMs,
तो हमने उसका success देख ही लिया आज भी banking में.
We cherry pick only those OEMs who timely pay their suppliers. And that is how the banks do the first level of underwriting. As you can see, we have already got a 50 crores line. So banks have given that these are the select OEMs from which we can give 50 crores to their supply chain. And we are now deploying those lines in the value chain.
Thank you guys. Thank you very much.
Thank you.
All right, great. Thank you so much, Amit, for a wonderful presentation. We'll move on to investors who are interested. Can we have investors who are interested in T assets raise their placards with the interested tag? Okay, so we have one investor who's interested. Investors who'd like to, okay, so we have two people who are interested. People who'd like to ask follow-up questions to the investor, to the founder and connect offline, please raise your placards. Okay, so we have three investors who'd like to ask follow-up questions. So founders can take note for that. All right, great. Moving on to our next presentation, we have with us AgroEdge Technologies, which is a startup by Mayank Rajput, which is an advanced IoT agri-tech product startup in the field of long-range communications, delivering actionable insights to farmers to increase their yield by 30% and decrease pesticide, water, fertilizer usage by more than 30%. It's already catering to more than 300 acres and corporates like Sigfox, Honeywell, Murata, and others. Can we have a big round of applause for Mayank Rajput, please, guys? Guys, please, we'd like the round of applause to be louder. Founders work very hard. I can vouch for that. So yeah.
So I will not use the mic. I think mic is okay. So very good morning, everyone. My name is Mayank Rajput, and I am the co-founder of AgroEdge Technologies. Okay. So we are a deep tech startup which uses AI and machine learning to get the insights so that we can help farmer to improve their productivity and so that they can take decisions faster and smarter. The thing is that right now in India itself, we have 60% of the land which is used for farming. But out of that 60%, 50% of the land has some issues. In terms of they have the nutrition, low nutrition level, they have some other problems because people are using more pesticides, people are using more fertilizers, etc. And because of that, there will be scarcity by 2040. So right now we are feeding 800 million people for free right now. But if the same trend will go, we have to import the things from overseas. So that's the major problem right now. So if we see right now, most of the people don't have right now in India itself, people don't use actionable insights because like it's a eyeballing thing. So farmers usually call the farming center in India, like IFCO has running their own centers. They send some pictures, okay, this is happening in my farm. And they just give, okay, this is the indication, you have to do this thing or that thing. But at the same time, they can't give the exact number, like how much amount of pesticide or fertilizers that you have to use. Because of that, last year itself, one of our consignments got rejected from Middle East part for the tea. Because they said, there's a huge pesticide content in your tea. So it was a loss of around $25 million in the last year. At the same time, right now, people are using more and more water because they have no insights how much water they have to use at a particular crop cycle. They just use the eyeballing figure and they have like an approximation based thing. So at the same time, they don't have the qualitative inputs that is like NPK or weather insights or the crop specific insights, because crop specific insight is really important, but people don't have the particular insights because they are not having any tools right now. So we have validated the problem statement same while talking to a lot of people, especially the agriculture universities, as well as FPOs and the farmers at the grassroots level. And based on that, we realized, okay, yes, this is a bigger problem. So we came with a solution. We call that Intel of precision farming. So that means you can get like the insights at your fingertips. So for that, we have developed our device named Krashak. So in Hindi, we call the person like who do the farming, kheti karne wala is Krashak. So device name is Krashak. So this is Intelligent Farming Kit. So this is a plug and play kit. That means you don't need to buy the whole device. So based on a farming requirement, you can take plug and play the sensors and use it. At the same time, it's highly affordable as compared to our competitors. When we started our journey, there were only 4 or 5 players. But right now we see like there are 15 to 16 startups in the same area. That's true. But we have some edge. That is, we have made completely made in India hardware. We have designed everything by ourselves. At the same time, we are affordable. Plus, we have long-range communication that most of the people don't have. Yes, people have LoRa right now, but if you are talking about the big field, it can give 20 kilometers. But if you're talking about cities, it can give 2 or 3 kilometers. But we can go for the more long-range communication. And we have a heat map. So right now, if you see for any of the IoT devices, they just put only one sensor node in 1 hectare of land, etc. So that means you're getting the insight only on one particular part. But we have multiple sensor nodes. That means you can map out the whole area. So let's say this is my whole land. So I have multiple sensor node. And based on that, I will have the indication, okay, which part has the problem. So for the business model, we have B2B, B2C, and B2G. For B2G, we have recently started collaborating with IFCO. So IFCO is providing us insights, and they are in the process of buying 1,000 devices to roll out among the farmers through government subsidies. That is one way. At the same time, we are talking to FPOs through the partners such as NIAM Jaipur and IIT BHU, because they have already connected us with them. So right now, we are developing our own AI for the high-valued crops, which are barley and tea. Because like the people are getting more and more profits if they have like the high yield as well as like the good quality inputs. So for the B2B market, we gave our devices to Honeywell, Morata Technologies. At the same time, we have interest from Corteva Biosciences and Grow Asia from Singapore. And we have also talked to CHS from US, John Deere, we are in early discussion. So they want to work with us. So because we realize they are realizing we can go into the African markets also if we can keep the price a bit more lower, whatever we have right now. So this is the revenue from the paid pilots only. But we believe after 6 months, once we will have the final order from IFCO for 1,000 devices, we will reach out to 1 CR. And at the same time, right now we are supplying the device to Morata for testing out in the Indian field, because they want to enter into agriculture area and they are evaluating multiple devices from multiple startups. So this is where we are. So this is the product roadmap. So right now we need capital mainly for taking the certifications, filing the full IPs, because we have planned 3 IPs. We have already started working on that part through the partners. At the same time, we will have to develop our own team, like we need to hire more people. And by the end of this year, we are raising the less round right now, like the less capital, so that we can have like more stuff, whatever is needed, we can fulfill. But we are in the process of raising like the bigger round. We have the commitment from Singapore investors for the next round, which we will start in the month of December. So this is the team. I have experience from Singapore, Germany, and MBA from US. My co-founder has bachelor's from University of London, IIT Roorkee, and master's from TUMNT. He is also CFA level 1. Other guy, like he's a product head right now. He has experience from NTU, from IIT Kharagpur for the past 7 years. So he is already a good development guy. And apart from these mentors, we also have like some more agri mentors from specific crops. So we are working with them to develop the AI part that is taking time. So for the funding part, we are just seeking only 40 lakhs from the investor side. We have 40 lakhs commitment from Samriddhi Accelerator Scheme. So the money we will use mainly for working capital, certifications, and mainly tech development. And as I mentioned, like we will start raising our next round, like by most likely from September onwards, because we believe after that, like after September, we will have more revenue, at least more than 50 lakhs. So this is the support we have. These are the recognition we have. We are already developing some strategic partnerships from B2B, at least like if they will not partner in long run, but at least they are providing the insights that we will get to enter into the overseas as well as Indian market. So for small and marginal farmers, we are working with IFCO. We have just started 3 days back, the partnership with them. So they are providing us all the data, whatever the calls, they get around 50,000 calls every day on their call centers. So we are getting all the data from them so that we can develop for multiple crops in shorter time. And they are also interested, some of the people are also interested in coming as a strategic investor, but at the later stages. So this is we have. So I believe you guys will contribute to the Indian economy, like just make our farmers to take the smart and make them smarter farmer as compared to European counterparts and help in creating a sustainable society.
So, hi Mayank.
Hi.
So you mentioned that, and we know that there are quite a few,
Yes.
competitors to what you're offering.
Yes.
What is this patent? Tell us something about the patent that you are planning to.
Sorry?
The patent you are planning to file. Tell us more about that. What is it that you are, going for?
So let's go one by one. I will just explain like in those different. So first one is. Please hold the mic. Okay. So the first one is smart agriculture IoT solution for long range communication. Okay. This part we have completely designed the hardware part, like which is already low power design. We have already made that part. Plus the plug and play, like how you have to take it out. Like you have the same hardware. You don't need to change the. Let's say I have one version which will require only 2 sensors. Second version requires 3 sensors. Third require 4 sensors. So I can use the same hardware for all the sensors. I just need to plug it, the particular sensor unit, which has 2 sensors, and just take it out. So that is one thing. The second part, we are also developing the drip irrigation. That is like a completely control system based mechanism. So that means that will be a complete solution for the farm automation. So that is another thing that people are seeking right now, especially for B2B market. And the third one is for the sensor design. My specialization is sensor designing. I have already worked on flexible, stretchable sensors as well as designing multiple sensors for gas sensor. One of the technologies was commercialized when I was in CSIR CRI lab. And I also have like 2 IPs filed for my other sensors, not this particular agriculture sensor. So we are designing these sensors that will be cost effective. So right now the cost, whatever the cost is coming around 4,500 for developing of one sensor unit, we can take it down to around 3,000, less than 2,500 with the particular solution. So these are the sensors that we have. So I am the one who is designing the particular sensor, all the sensors, and the Dr. Arvind Kumar Gupta, like he is the tech consultant, or I will say tech head. He's designing the signal conditioning, and my third co-founder, Akshay, he's doing the AI and ML part. So we are taking help from the agriculture universities, agriculture scientists, to take the samples from multiple soils. It's not only one soil. So you will have for the whole range. So this is the vision we have. So this is where we are seeking, we will go. At the same time, we have started working with some drone companies. They are using right now your camera, mainly the hyperspectral camera, or they're using satellite imaging. That is one thing. But the thing is that at the same time, okay, from the hyperspectral camera, they have to hire more resources. Like they need deep learning people and other people. So they are looking for some solution which can give at least early insights, so that they will have the whole mapping, what's happening in the farm, and based on that, they will just do the spraying in one particular part or the whole area. So that is where we are right now, and this is where we are going right now. with the help of strategic people. So, yeah.
Also, could you tell us something about the revenue model that you propose to have?
Okay. For the revenue model, as I mentioned, like we are seeking B2B, B2C, B2G. I think B2G is quite clear. For B2B, there are companies we are exploring, we are working, we are supplying the devices. But definitely we will work with only one company, not with all the companies. So we have CHS. CHS, I already talked to the main guy, like who is investor also, strategic investor. The Corteva Agri Sciences is the second, Honeywell is third, and this Morata is fourth. So we will see where our interest will align in long run with the companies. That is one thing. Second thing, we are selling them for non-white label basis. That is B2C, B2B. And apart from that, there are a lot of agri-SaaS platforms. Let's say Cropin is one, Dehat is another. So they are working on satellite images and they are also buying IoT devices. So we are also exploring in India as well as overseas, the companies who don't want to develop their own hardware, we can provide them the hardware and they can get the complete insight on the platform. So that is another revenue model. And the third one is, as I mentioned, like we are working with the companies like who are into drone space. So that means we are collecting all the data on our platform. And when we will map out the whole land also, so we have some questionnaire, we have already designed that particular part, but that is not right now the vision for the company. But in later part, the whole data we can share with the bank, the farmers who want to take the particular loan. So we can give the credit scoring based on the particular parameters that we have, plus these particular farm insights they will have. So that is the revenue model we will have.
By what time do you think all these will kick in?
Sorry?
These models, by what time will these start kicking in?
So as I mentioned earlier, like we already have a device, so we need to take the certifications and just need to have the injection molding, etc., for making the final thing, so that we can have like a completely export level device in India as well as overseas. So that will take around 6 months right now. And after that only we will go full-fledged in the market. So that's why like we decided not to serve multiple farmers, because if your device won't work out, let's say like we are using injection mold, instead of injection molding, we are using 3D printing in-house that we are doing right now. So that will, like, if water will go inside, then it will damage the whole thing. So that's why like we are sending a bit lower, but we have a lot of good traction. And I'm bringing like all the companies on board through my own connections that I have from Singapore and US through my friends. Next question, sir.
Any further questions, or else we can call the picture app for now?
Hi, Mayank. I'm Nitin this side. Good to hear you. Mayank, I have a question about your tagline per se, delivering actionable insights to farmers to increase their yield by 30%. Any benchmark for measuring this 30% with so much of the work you are doing? I think you can increase it by 100%.
Sorry, please say again, last line.
So delivering actionable insights by increasing yield up to 30%. With so much of the good work you are doing, why not increase it by 100% then? Any benchmark why you have taken this as 30% only?
Okay, because right now, like if you depend only on IoT system, because like it's a complete value chain. Like when farmer do using IoT system and other things also, there are always some loopholes. So let's say like they are taking these things into consideration. Let's say at what time you have to do the fertilization, like you have to add the fertilizer, pesticide, or water for irrigation. But at the same time, right now, if the people are having yield of around 70%, then you can increase up to 30%. So for example, in sugarcane market, right now, in India itself, the yield is only 30%. Like out of 100, they are only getting 30. So if they are increasing up to 30%, because the problem is with the particular, your moisture level, your temperature level at the soil level, they have. And for the tea state, the upper teas, like which go for the export market, is around 8,000 rupees per kg. But because of not using the particular insights at the right time, they are losing a lot of money. So that's why people will buy, and they can improve their yield by, this is just an approximation. It can be 5 or 10% less, it can be 5 or 10% more. So that is like generalized based on our competitors, based on our analysis. While talking to the specialist, this is the approximation that we reached on conclusion based on that. Thank you.
Great. Thank you so much. The time is up for the questions now. Can we have a big round of applause for Mayank, please? You can keep the mic here itself. You can get off stage, Mayank. We can now move on to the next steps with regards to this pitch, which is getting a sense of investors who are interested. So investors who are interested in AgroEdge by Mayank, can you please raise your placards? Okay, we have one interest. Mayank, please take note. Investors would like to ask follow-up questions and connect with Mayank offline. Can you please raise your placards? Great. So we have around 6 people who are interested in asking follow-up questions. Investors, please take note that apart from just raising your placards, you also need to write in the folder that has been shared with you that you're interested or you'd like a follow-up. That helps the team at Amity Incubator to kind of arrange follow-up discussions and facilitate the same. All right, great. Next up, we have with us Stargaze. Stargaze is a platform that is created for dreams of billions to be connected with their favorite star. Futuristic technology like AI and blockchain will make this platform even more seamless. Creating a fan world by bridging the gap between fans and their favorite stars via technology. All right, this looks exciting. We have with us founder of Stargaze, Rahul Reddy with us. Big hand for Rahul Reddy, please.
Hello, everyone. I'm Shreyas Reddy. Rahul couldn't make it here due to some health issues. So change of plans, and I took my flight in the morning. So yeah. So presenting Stargaze, I am Shreyas, co-founder and CEO at Stargaze. Stargaze is a fan-star interaction app. We are trying to compete and put our mark in the social media space out there. So yeah, so we are on our mission to be a fan-star interaction app, wherein there is no central platform as such, where creators and stars can actually make money and also connect with their fans. I'm sorry. So this is the serious issue which we have observed, and we really want to take it up and solve this. And we have already done our beta testing. Before that, I'd like to talk a little bit about our partner company, Influ. Influ is an influencer tech company based out of T-Hub, Hyderabad. We work with I'm the founder and CEO for Influ, and we recently did a collaboration with Stargaze, and I came in as a co-founder and CEO at Stargaze. So at Influ, we work with over 15,000 social media influencers across India, having about 100 crore mutually inclusive follower base. So this is our strength. We are very strong in 18 plus genres, right from lifestyle, to all the way to film, movie stars, and all these things. At the same time, we have dispersed about 5 crore in rupees to all the creators in last 1.5 years. We did a revenue of 3.5 CR last financial year. We generated a content viewership of 2 billion views on all different social media platforms, generated a content of 1,600 hours of content, and partnered with about 10 companies and 20 plus agencies out there across India. So that is something. So almost, it's not just about working with a lot of brands out there. We work with almost all social media platforms, all the way from Josh, Moch, Roposo, Rizzle, Shop 101, YouTube Shorts, Spotify. All these platforms here are our clients, and we serve the content creators, onboard them, maintain them, make revenues for them on all these platforms apart from what we work in the direct brands as well. So these are some of the brands which we work directly, but we work with most of the brands out there indirectly with our partner companies and partner agencies. So this is something, doing all of this, we have generated about 1600 hours of content on all the social media platforms here, generated about 2 billion views. Even then, we still feel there is a need for a fan star interaction app, which is not at all happening across any social media platform out there. Now that all social media platforms here are good at viewership, good at all these things, be it virality, be it moderation, content, everything. But nobody is actually trying to focus on the creator side. Creator side monetization is not on the higher side. So this is something, even if we talk about YouTube revenue and all that, it's not enough for the content being generated out there. So this is something we felt that as a serious problem. I've been trying to figure out a solution since 2.5 years, and that's when I got associated with Stargaze. So Stargaze, the problem here in the entire social media space is this stardom is short time, right? So let's say one video goes viral, this creator out here will receive that stardom. And after that, let's say the video goes out or next videos doesn't really perform out there, the stardom is all gone. And imagine, let's say there is a YouTube channel gone all of a sudden just because of some copyright issues and stuff like that. Creators can't really get back their own following, what they usually had before. So this is a serious issue. And also the income streams are irregular. You don't know what is your income today, and you can't even predict what is the income, what will be the income in the next month. So this is a serious issue in the creator space, and we wanted to resolve this. So that is something, these are some of the pain points for the creator and the star side. There are other problems related to fans as well. Fans, let's say you message your favorite star out there, it goes in vain, no, it just out of ignorance. So nobody knows who let's say I'm a star, nobody knows who my biggest fan is. So this is again a serious problem, and we are trying to solve that as well. So the solution here is an app driven by AI, wherein it's going to be a fan world. It's going to be a fan world wherein creators and stars can offer exclusive content in different formats, be it text, be it stories, be it long format content, short format content, and anything of that matter, right? For a subscription. So fans here have to burn star coins, which will be either earned or bought. These star coins will become revenue for the stars out here. So this is in this way, you know for a reason what is the subscription amount like you will be receiving this month. You can understand and create your content better so that you actually make the most out of your next month as well. So it helps the creator economy in different ways. So this is something, and there is no central platform also which is dealing with all of this. So we are trying to combine everything and put it on under one roof with a gamification factor. So this is something. So coming to the TAM, it's a big opportunity, I would say. So there are about 1.2 billion mobile devices here in India, and internet connections are over 750 million. Most of the people, like about 50%, are under the age group of 40, and that covers about 356 million people consuming 50 to 60 minutes hours of 50 to 60 minutes of content on a daily basis. So that's a very big market to tap into. Coming to the subscription revenue of India, it is projected to be about 940 billion rupees in 2023, a rise from 631 billion rupees in 2020. So this is something, and the advertising revenue of the country is also growing. So this is an interesting opportunity wherein we can offer brand deals as well as a part of the app. So there are about 27 lakh blue ticks. If you don't understand blue ticks on Instagram, it's a celebrity kind of a place wherein these guys have a lot of following, lot of stardom, lot of engagement, wherein this can be monetized. So direct influencer revenue of India is standing at about 900 crores in 2021. It has increased to 1500 crores directly in 2022. The stats are out, and this is just the direct one. Indirectly, it is estimated to be 3x as per Deloitte, and this is a ever growing market is what we see. So this is how the app looks like. We did our beta testing.
1 minute left for the pitch. 1 minute left for the pitch.
Yeah, we did our beta testing. Yeah. So we have offered through fan base. We have generated good revenues for the creators in our beta testing. We gave them brand collaborations and a lot. So this is the landscape of our influencer ecosystem. So we have tested the waters in the Web2 market, and we want to go ahead with the Web3 into 2024. We have a strong tech team internally, and we are doing this with all the effort. So these are the features which we have launched: exclusive content, one-on-one video calls, star interactions, and star coins. E-commerce is in the roadmap. And we want to do a lot in the NFT space as well.
The time for the pitch is up. We can now open the floor for questions. Investors who have questions can raise their hands and ask questions.
Yeah. Any questions?
I guess we have no questions so far, so I think we would be good.
No, quickly, maybe, can you tell us a little bit more about him?
Yeah.
Hi. Tell us a little bit more about the financials. How much have you been able to monetize? Where do you stand now?
Okay.
And maybe next year, what are you targeting?
So we offered a freemium model. We gave out a lot of stars star points to a lot of our users. We did this with about 100 local celebrities, local stars as well. So it was all over. So there was a lot of exclusive content which these guys were posting on a daily basis, and it went viral so much so that there were articles about us the next day. So yeah, this is something. We have raised a fund of 45 lakhs seed fund in 2022, and we were able to achieve this. Yeah.
Do you also see talent search a relevant part of the business
Yes,
for you?
That's part of the business model.
So you are using that particular search feature right
Yes,
now?
we are doing that.
So what sort of revenue number you have there?
So we are in the pre-revenue phase. We did it in the freemium model and it worked. Offline, we are doing it with our network of creators.
Got it.
Yeah.
All right, great. I think we are done with the questions. Thank you so much. You can now.
Thanks a lot for having me.
Guys, can we have a big hand for Stargaze? All right, great. So before I call on to the next startup, we'd like to now call on stage Mr. Rajasvi Babbar from the Amity Technology Incubator, who would like to say a few words.
I just wanted to welcome Mr. Jeet Vijay, who has just joined us. He's the CEO for MeitY Startup Hub. A lot of startups that you see here are a part of the MeitY cohort that we've been running and have been committed, match committed by MeitY as such. So Jeet, we welcome you here, and we'd request you to please say a few words. I think we need a few words about G20s, your participation in G20 as well.
All right. Good afternoon, everyone. It's really a privilege to be here with you guys today. And I think Ojasvi and the team here is doing a phenomenal job to actually, try to leverage the government money to bring in the private sector to invest in these startups. Because we work with a lot of incubators that we fund, a lot of accelerators that we fund, and it's very few that we really see are actually committed, focused, and really interested in ensuring the success of startups. And I think Ojasvi has the drive, and it's primarily because of Dr. Chauhan. Because seeing him sit here the whole day today and give us valuable time and infuse the organization with the vision, drive, and the dedication to try to make the startups a success. And so a lot of kudos to you, Mr. Chauhan, for doing this and leading the organization to the way it is. And I think it's in the DNA of Amity Group itself, given how you're running it. You are focused more on the growth as a startup itself. Though you're an institution, but the way you're growing, the way you're focused on delivering value and outcome to your constituents, I think it's commendable. Having said that, I think where we look at this is, it's great to have all these investors here today. It's very hard to get a lot of investors together to look at these startups. And these startups range all the way from early stage to some that are already in the market and raising money and have traction with the customers as well as global expansion dreams. Now, talking a little bit about what Mighty is doing, just, as our Honorable Prime Minister says, the future of India will be built on the dreams, dedication, drive of its youth. It's the people, it's the kids that are in this college. And I think like 40,000 kids here. It's amazing because I'm a graduate of UT Austin. And Austin, so we had I think 45,000 kids on campus at that time. So seeing one campus having such a vibrant student community is quite impressive. But now where we stand today, so government is really focused on figuring out how do we enable our Prime Minister's vision of seeding and supporting these startups. So at Mighty itself, we are funding 51 plus incubators across India. We are funding 22 plus accelerators to a different scheme. We have 50 plus center of excellence, 20 odd in emerging tech, so AR, VR, gaming, VFX, 5G, drone, etc. And 20 in deep tech, so photonics, membrane, etc. Spread out across various IITs, IIMs, and the institutions of higher learning. Now that's more than 150 odd assets that we have built across India to support startups. And if you look at our funding schemes, they range all the way from idea level validation to prototype creation, commercialization, acceleration, and a fund of fund. So we even have, and you may not realize it, but the government at Mighty, we have something called EDF, Electronic Development Fund, which actually is a fund of fund managed by Can Bank. It invests in VC funds that invest in electronic and hardware startups. Because unlike SaaS startups, the hardware startups don't get a lot of investor love. So government has proactively taken the decision to create a fund of fund to enable the growth of these hardware-oriented startups. Aside from the funding and aside from the assets that we're creating, we understand that government cannot do everything. So our focus has been to bring more private sector into the game. So in our funding schemes and programs, we are providing matching funding. So for example, Samrit is one of the schemes. And some of the startups here will be part of that. Over there, government is committing up to 40 lakh rupees on same terms as a lead investor. So if any of you invest in a startup that's part of the Samrit cohort, then government will match up to 40 lakh rupees on the same terms as you are putting. So your 40 lakh gets a leverage of the government's matching funding. And I think that's a unique aspect that the government is trying to build in to infuse more domestic rupee capital into the early stage alternate asset class. Now, third thing that we are doing is we are working very closely with a lot of corporates. Because corporates, academia is great for, nucleating an idea, providing them, core competencies to grow something. But unless you get corporates involved, you can't really scale enterprises. So we have programs with Meta, with Google, with Microsoft, with Intel, with Jio, with Adani Group, etc., Vedanta, where they are looking for either startups that they can acquire, startups they can invest in, or startups that they can mentor and fund. So the idea is to bring more corporates into it. Now we are working with Sequoia Capital, we are working with a lot of other investors as well, because they are ultimately the growth equity, that's where it'll come from. So we are bringing a lot of investors into the game, we are bringing a lot of corporates into the game, we are leveraging the core academic groups that we have like MIT to really propel the ecosystem further. Also, one last thing is we do a lot of international expansion program for our startups. So I have bilateral programs with UK, France, Germany. We're launching something with Saudi. So Indian startups can have access to the global markets and they can go over there and solve problems. Now, having said that, I think this year being India's G20 presidency, it's a year of great reflection and a great opportunity and great transformation. Because you don't get G20 presidency every year, and lucky for us now that we are doing it in a physical format. So this year we have more than 200 G20 meetings happening in India. And as part of the G20 narrative, under MITI, MITI is the nodal agency for Digital Economy Working Group. And in Digital Economy Working Group, we are working with all the G20 nations and the 9 invited guest countries on 3 pillars. One is cybersecurity. How do we strengthen cybersecurity framework, collaboration, cert-to-cert collaboration across the nations? Second is digital skilling. Because in a world that's being rapidly redefined by digital technologies and transformations, we need to upskill and cross-skill our population and youth in the digital technologies, its use, its ethics, its governance. Third thing is the digital public goods. India, if you look at it, I was talking to someone the other day, government is not only investing in startups, government is not only implementing startup solutions, government is creating startup solutions. So now if you look at ONDC, UPI, Aadhaar, CoWIN, ULIP, Gati Shakti, you name it, all these are transformative digital public platforms that are allowing private sector startups to build on it. And that's a uniqueness of what India has been able to do compared to the other G20 nations, that we have created something very unique public-private ship model in terms of, for example, just UPI. UPI has transformed the way the fintech and the digital transactions work, and we are the fastest growing fintech market in the world. Same thing will happen with NDHM, National Digital Health Mission, ONDC for commerce, ULIP for logistics, etc. Now, within the G20, what we are doing at MITI is something called Digital Innovation Alliance. So I'm heading this initiative where I'm bringing startups in 6 sectors: agri-tech, health tech, fintech, ed-tech, circular economy, and cybersecurity, from all the G20 nations plus 9 invited guest countries to come to India. So the program was launched now in January. And we have the applications open. We are collaborating with the mission, Indian embassies and missions and high commissions in other countries, and our bilateral partners in other countries to source applications from their nations. So April end, the applications will close. Then from May to August, we'll do virtual acceleration program for all the 174 startups from 29 nations that will be part of this program. So there'll be market access, collaboration, co-creation, investor and funding, etc., happening for them. And they'll culminate in a mega summit in August in Bangalore on the sidelines of the Digital Economy Working Group meeting between August 16 and 19, where all these startups will be recognized, celebrated, rewarded, and funded. So that's a big program that we are launching to make sure that we can, as our Honorable Prime Minister says, right, Vasudhaiva Kutumbakam, one earth, one family, one future. So how do we bring all these startups together? How do we bring investors together? How do we bring ecosystems together to create something that's benefit for the humanity as a whole? Because it's not a responsibility that we have only to 1.4 billion people in India, but 7.6 billion people across the world. 1/3 of the world still suffers from digital divide. And without access to information, you're disempowered, right? Information empowers people. So how do we bring it more? How do we enable everyone to be included in the economic growth story of India and the global economy as a whole? So that's our narrative that we are working on. And the investors here, I would love to say that, be engaged more with the ministry, see what we can do together, because government of today is not the government of past. I'm a lateral hire into the government, so I can tell you that we are more about people, process, platform, and performance. So anything that we can do together as investors, we'll love to do that. For these startups, definitely look at this program that we have launched and please apply. And of course, Dr. Chauhan, I'll have a discussion with you and see how you can be as well more engaged in this program as we move forward, given that your global footprint and your civic engagement and responsible attitude that you have towards the ecosystem. So we'd love to figure out how MIT and you in your personal capacity can be more engaged in this nation building mission that we have. So thank you so much for this opportunity to be here with you guys today. And I think kudos to the team at the incubator for really making us see what they are doing on the ground. And I think it's fabulous. So thank you.
Jeet, I would say absolutely amazing, Jeet, to hear how dynamic the work is that the government is doing. Actually, some of these things are new to me also. I do follow METI, and I will say that not only at this campus, but across many of our universities, METI is supporting students, entrepreneurs, amazing initiative, and someone like you leading the startup hub at METI, I think we all feel so proud. You may have to leave early. So there are a number of startups here who are supported by the Samrit plan of METI. Raise your hand if you are benefiting from this. Great. So these are all the companies that you are supporting. We're very grateful to you. I think they're grateful as well. And maybe before lunch, in case Jeet has to leave, come and take a photograph. So he has a picture with all these Samrit and METI supported startups. I think he'll be very happy to see and meet you also. Jeet, thank you so much for being here.
Thank you.
Thank you so much, Mr. Jeet. Can we have a big round of applause for Mr. Jeet, please? I think hearing him was very insightful for me as well, and was so inspiring to see the work that you've been doing, and for giving us perspective around the ecosystem growth in general. Next up, we have with us, next startup is in the mental health space, which is something that even I'm very passionate about. We have with us Mimblu. Mimblu is a text-based behavioral wellness platform that provides the easiest access to mental health care within a clinically proven format to help with stress, anxiety, and depression. Users match with therapists and communicate via text, voice, or live video. And they're building from India for the world. Can we have a big round of applause for Mr. Yash Malhotra and Chinmay Behera from Mimblu?
Good afternoon, everybody. So I'll firstly introduce myself and my co-founder. So my name is Yash. I have previously spent 6 years building Zomato from 2012 to 2018. Post that, I was at Expedia for a couple of years. My co-founder Chinmay, he's a CTO of Mimblu. He spent his previous career at Gojek, at PhonePe, at Ola, and Goldman Sachs. Excuse me. Let me quickly walk you through what we're building and why we're building it. So, sorry, there you go. There you go. So, fundamentally, mental health care in the country and how users access it, the system is fairly broken, and that's what we're trying to solve. That's the problem we're trying to solve. So when you largely look at the barriers to mental health care, there's two obvious barriers that everybody's fully aware about, which is affordability. Mental health care is not the cheapest to access currently, and it's always out-of-pocket expenses. The second piece is accessibility. How do you access mental health care? How do you reach out and understand who you should approach fundamentally? And the third part, which is kind of slightly driven under the carpet, is, okay, now I know I need help. How do I go about it? What is the first step I take? And there's so many barriers that it kind of breaks down at this step, and people just don't enter the mental health ecosystem altogether. Sorry. So how we're trying to solve that is our platform uses async text therapy, asynchronous text-based therapy, which is clinically proven. I'll talk a little bit more about the platform, but I'll tell you how it solves for these three problems. So firstly, we are about 5 times cheaper than traditional in-person therapy because we're not session-based, and that's a very, very important factor in the platform. Secondly, users have 24/7 access to the therapists they've matched with on the platform, who are real people. We are not, using chatbots. These are real, actual live therapists who are communicating with our users, and the users have the ability to communicate how they feel when they feel on the platform itself in their own space. Now, when I say own space, I underline that because India is a country where space can be a luxury, right? So when you need mental health care, you might not be able to access it via video because you don't have the space in your home with your family around. You can't access it at work. You can't take calls from a cafe. Because of the format we have, we help you create your own safe space. And the third and most important factor in this is we break that first step barrier with a very, very easily approachable format where a user can download the app on the iOS App Store or the Google Play Store and connect and communicate with the therapist the same day itself. So let me walk you through how the platform works. So once a user downloads the app asks them how they're feeling today. This is sort of a self-diagnosis in terms of their behavioral wellness. Once they self-diagnose, our algorithm then matches them with the right therapist for them. Once they select the therapist, we ask them, how do you want to communicate with them? Via text, video, or text plus video? If they select text, then basically select a plan of 14, 30, or 60 days, however long they want to communicate with the therapist. And post that, during that plan access, they can communicate unlimited number of times with each therapist via text or voice notes. The therapist responds to them in an asynchronous format 2 to 3 times a day. Now, this format is clinically proven to work for anxiety, stress, and depression, which constitute 50% of all mental health disorders globally. So that's basically the TAM fundamentally that we are going after. When you look at it, this format has been clinically proven by studies to reduce suffering for anxiety, depression, and stress by close to 70%. There's studies done around how this format is very impactful in the workplace itself, but I'll speak a little bit more about that as we go on. Sorry, I'm struggling with the clicker. Can you just go next slide, please? Yeah, I'll continue with what the market is. So globally, this is around a $214 billion market when it comes to behavioral wellness itself. And why I say behavioral wellness is we are not focusing on the deeper clinical and psychiatry-based issues of mental health care. We're very much focused on the behavioral wellness, which is anxiety, which is depression, which is stress, as I mentioned, makes up 50% of all mental health disorders globally. In India, this is for us about just under a $2 billion opportunity. And we are very much focused on the global opportunity here. I tell you why. Because for us, we found India as a great place to start from. We launched our public beta as of last year. The goal was very simple. We're a mental health platform. We don't want to scale unless we know we work, unless we know the platform is efficient and the platform is actually solving the problem we set out to solve. We launched in January of last year with a goal of onboarding roughly around 250 odd users completely organically, get them in a feedback loop, understand what's working, understand what's not working. And that worked out really well for us. Since then, we onboarded organically without any form of marketing whatsoever, around just under 500 users. And within these 500 users, we look for 2 green signals. One is, are they using the format that we want to use, which is text-based? And 2, does this work? So 90% of our paid users chose the text-only format. I did a lot of calls with our users and spoke to them. And one of the biggest reasons that they said was the space piece. A lot of these users individually had not got into mental health care altogether because they didn't have space. Using Mimblu on their phone, created that own safe space for them, where they were able to communicate with their therapist in their own home, sitting next to their partners, or having dinner with their family. So space wasn't a constraint anymore. So for them, text worked beautifully. The second piece was we wanted to check if Mimblu actually works. So we actually tracked better than the clinical study. 80% of our users, when we asked them, did Mimblu help you, said yes. So for us, we felt very confident with these 2 large green markers that we were basically looking at. Yeah, this is where we were. So this is what the TAM looks like. In India, there's about 200 million individuals who suffer from a mental health disorder. Roughly half of that is anxiety or depression, and that number checks out globally as well. In terms of competition, there's largely 4 buckets that we look at. We're building out a global platform from within India. There are 2 large American, US-based companies who are doing a very similar format of mental health care, Talkspace and BetterHelp. Talkspace and BetterHelp are both North America focused and purely building out of there for those markets. BetterHelp is a public listed company doing async text therapy with an ARR of $700 million. Talkspace does roughly around $100 million within the same space, just focus out of North America. Our focus is primarily India, and then we're looking at other local markets such as UAE and Singapore, where we know there is a strong Indian expat population, which makes it an easy entry point for us as a market as well. In terms of how we make money, right now we're focused on the D2C aspect, where users can purchase plans on the platform. There's Mimblu Lite, which is text only. There's Mimblu Plus, which is text plus video, and video add-on sessions. Fundamentally, we are focusing on text because that's what the users want. 90% of our users have chosen text-only platforms, text-only plans, sorry. And then we see a large opportunity in the B2B space as well, where employers can provide easy access mental health care to their employees via Mimblu, which is going to be a very large play for us as we scale. And the reason why I say very large is because there's clinical research done around how this format of mental health care is one of the most effective in the workplace to increase employee productivity, as well as reduce relevant employee absenteeism within the workplace. And roughly, as of a study done by in 2017, around 42.5% of the Indian private sector workforce suffers from either anxiety or depression. So when you're in your office, odds are the person sitting next to you is suffering from something in silence. And that is why we know that there is such a large opportunity for us to be able to solve that problem fundamentally. Here's what the traction has been in terms of what we were able to set out. We set out 2 green markers for ourselves, which we've hit, which is now we're basically raising, we're looking at raising capital. Couple of things that I want to point out on this slide. The average monetization percentage for behavioral wellness apps on the App Store or the Play Store ranges anywhere between 3 to 5%. We are well over 10% at this point for us. So monetization has been excellent on the app. Again, all of this is organic. We've not done marketing. We just let it out on the platform. We did dipstick formats of marketing just to understand where we really need to invest our money as we scale. So that's basically what we've done so far. Couple of other interesting anecdotal information, one which I told you about the space when you spoke to our users. The second piece is 20% of our users are from outside of India. We've done absolutely no marketing. We've done nothing.
2 minutes left for the presentation.
Cool. Yeah, so we've done nothing internationally, but 20% of our users found us on the App Store and the Play Store. And the great thing about this is we are able to scale internationally because we've completely flipped how mental health care with live therapists works. Fundamentally, that was not a scalable proposition until this format. Because if you look at, if there's 1,000 therapists in India, they can do live sessions, maybe up to 6 sessions a day, which means there can totally be about 6,000 sessions in India that can happen in terms of mental health care. We are not session-based, we are asynchronous, which basically means that our therapists can work with up to 50 to 60 clients a day because they're not working session-based, which means we can work with international clients, we can use our Indian therapists to maybe take 2 to 3 interactions with 50 to 60 clients every day. So previously, if you look at how mental health care worked, was therapists were selling time, which is not scalable. What we are doing is we are letting therapists sell skill, which is the scalable and actually more internationally approachable format as well. In terms of what we are looking to do, this is pretty much what I mentioned. This is a little more detail and I can come back to this, but I'm short on time. So I'll quickly tell you where we stand with our fundraising. So we're currently looking to scale to raise $500,000 at a 2.5 million post-money valuation. We have 2 commitments from angels. One is Akriti Chopra, who's the current CFO at Zomato, and Pramod Rao, who is the CEO at Thredo, who was ex-CMO at Zomato. And this is how we plan to basically utilize these funds.
We're done with the 10 minutes. So, Sahil, because of the technical glitch, maybe we can just give 60 seconds. Please.
Super,
Definitely.
thank you.
Because,
I appreciate that.
You should not be disadvantaged.
Super. So I'd like to use the 60 seconds to tell you what we're looking to do over the next 15 months or so. So currently we've got an understanding of what our PMF is. We're very confident with how we want to scale. We have our acquisition playbook built out. We've piloted our Mimblu at Work, which is the B2B side of things. So we know how we want to scale there as well. What we are focusing on over the next 3 months with this capital is to basically build a very strong and lean team to be able to scale this. The great thing about the format that we're using is we don't need a lot of feet on street to really build this out. We've created a gig economy for therapists, which works on commissions. And we have a very lean model of hiring that we've built out in terms of how we want to really scale the organization and not just the platform. There's a couple of product parts that I'd like to tell you about. So a couple of things that we're building out as we speak. One is progress tracking, which basically, once you get onto the platform, you're able to self-diagnose in terms of how you're feeling on a scale of 1 to 10 or 1 to 20. And as you go through the entire therapy on Mimblu, you're able to kind of see what your progress is as well. And because this format is clinically proven, that gives us great leverage in being able to build that out as well. And secondly, we are looking at adding CBT gamification. Now, this is a little more clinical and detailed, and I'm happy to kind of speak about it after because it'll take a little more time to explain. But basically, gamify how actions for therapy works within the most popular format of therapy, which is cognitive behavioral therapy, which all therapists on our platform use. So there is a great opportunity for gamification, which currently does not exist in the market at all. So that's two important parts that we're building out. And most importantly, I think one thing that I would like to mention is how we can really build a strong community and moat of therapists in India. So now therapist supply is limited. If you control therapist supply, you're able to really, really win this segment altogether. Therapists currently love us because of the format that we have. Because previously, as I said, they were always selling time. For the first time, we've given them the opportunity to sell the skill set. And that is what is a big pull for all the therapists who are on the platform. In fact, when we onboarded therapists, we onboarded 5 therapists. The rest 10 came through referrals. We've paused any onboarding of therapists because of the chicken and egg. We don't want too many therapists until we scale users. So that's kind of where we're at. Perfect. Thank you.
Great. Thank you so much. We can open the floor to questions now.
How do you recruit therapists? Sure. So we have a strong SOP of onboarding for therapists built out by Dr. Hansika Kapoor, who is a PhD from IIT in psychology. So the way we've done so far, as I initially said, we did a reach out of therapists, about 5 therapists. Most of them, the rest of them came through referrals because this is a platform that they really like working upon. To scale, I think referral is going to be the best way to grow because it's a very close-knit industry in terms of therapists. We also have inbound therapists who want to work with us, but we've kind of put them on the back burner until we look to scale. So for us, when we set out, we thought that is going to be a large challenge, whereas it proved to be the least of our concerns.
Sure. Follow-up question. So your revenue driver will be around B2B or B2C? Like in next 2 years, where do you see your revenue
B2C.
coming? B2C?
Yes. B2C.
And how do you reach out to intended consumer or patient?
Yeah. Sure. So if you focus on the D2C acquisition piece that we've mapped out, I think for us, because we are app-based, App Store optimization and SEO is going to be large organic drivers. We're focusing on how to build more of a pull product than a push product because we understand that CACs can always be the big burn for organizations within health tech as well. So for us, our focus in terms of user acquisition is built out more on how do we build a pull product. And here's how we're looking at it. So firstly, focus on SEO and App Store optimization. The second piece, which we think is going to be the largest driver of acquisition for us, is building a community-led acquisition piece via content loops. What I mean by that is when we looked at where we got those 450 odd paid users, 65% of them found us organically through our Instagram posts itself. So now, of course, Instagram is just one social channel. There's so many different channels that we can approach, but we use this time to understand who our demo is. So I'll give you a little bit idea of the demo so that I can explain to you how to kind of acquire them as well. So 70% of or 80% of all our users are between the age of 18 to 30, which is Gen Z and young millennials. So that is why we're very focused on social and content-based strategy. 70% of these individuals were women, 30% were men. An additional very important piece that we did not expect was 60% of our Indian users were based out of tier 2 and tier 3 cities. We kind of assumed it would be the opposite. We thought it would be 70, 30% metro split, but it was the opposite for us. So it kind of gave us great markers on how do we reach out to that audience. And that is why shareable, content-based, community driving of acquisition is going to be completely low cost for us, as well as a large driver in the brand building play as well. And for us, building a brand, which is a thought leader within the mental health care space, can be built via community and can be built via content. So those are the primary focuses. But of course, then we have the affiliate partner program, the referral program, and at a late stage, we might look at insurance partnerships as well to make sure that we're not just an out-of-pocket platform and we can have co-pay on the platform as well.
Hi, Yash, I have a couple of questions here. This is Addison. And these are fundamental. So when a patient is going through depression or is a mental health patient, the booking is usually done by the relative, right? So they may not be accessing the app themselves. So in your 440 paid user base, how many have been booked by the relatives? That is question number one, because that's how you find your customer. And the second fundamental question is, I also saw that 20% you said are international users, right? Do you have any vernacular capability? Because it's a text booking and therapy is more about in-person talks with the therapist. That is how the traditional model has worked. So when it is only text, and I understand that we want to maximize maximum time, do you have any vernacular capabilities today built in?
Sure. So I'll answer the first question. In terms of bookings, I think one of the biggest breaking points within the mental health care system is exactly what you mentioned, that most of the bookings are made by relatives. When we looked at data, that is, I would say, slightly more anecdotal. The reason why I say that is because the stigma kind of exists above the millennial. I think millennials also don't have that stigma as much. Gen Z barely has that stigma. In fact, they're very pro, mental health care. But I think the stigma exists in the slightly older generation when the relative piece really comes in. Until that, all of our users have pretty much reached out themselves, done their own payments for their, we don't say sessions because we are async, we're not session based, but they've done their payment for their own plans. So these are all individual users who've reached out themselves. Regarding secondly with capabilities for other languages within India itself, that is the goal, to recruit more diverse therapists within India itself. So some of our therapists currently speak English, Hindi, Gujarati, Marathi, and Kannada, if I'm not mistaken. So we have users who can reach out to those therapists in the language of choice if the therapist speaks it. And that is part of our product roadmap that Chinmay has also built out, that when the user is selecting the therapist, they can see what languages they speak. So that's definitely something we're looking at. But in terms of building something out, we don't really need to actually invest in the tech right now for that, because it's the same way as you'd use WhatsApp.
You said your ARPU is about 3,100 rupees. Yes. And maximum usage is on the text, yes, which costed about 1,200 rupees per month, right?
No, 1,200 for 14 days, 25 for,
So about 2,100 rupees. So an average stay of a consumer is about 1.5 months.
Yes.
Right?
Yes.
So what happens after that? They don't come back? What is it?
Sure. So mental health is likely not an always on subscription, right? It's not a Netflix where, people will subscribe for 12 months. We have two cohorts of users on our platform that we see. The first and the bigger cohort is likely the person who's come into mental health care for the first time. They're understanding how it works, and they will ideally spend maybe 30 to 40 days on the platform, roughly take 2 plans on the platform, and that will be it. Then we have another cohort of users on the platform who have been in mental health care before. They've spent.
Let's stay on that. This is a maximum cohort, the biggest cohort?
Yes, that's the biggest cohort. Yes.
So what is the path to profit on this? What's the cost to service this for 1.5 months, and what is the cost of acquisition of this customer?
Sure. So we expect our CAC to be roughly between 700 to 800 rupees. We've done our dipstick. Our adjusted CAC there was 850 rupees. now when we know we scale, we can basically bring that down to 700 to 800 rupees CAC. This CAC will be obviously significantly lower when you look at the B2B model as well. So for us, with the therapist split is 50-50. So we are already on this particular user, we are profitable.
Thanks. Great. So we are done with the questions for now. The time is up for now. So we can take the more questions offline.
Thank you.
Awesome. We can now move on to the next steps for Mimblue. Investors who are interested to consider investing in Mimblue can raise your cards. Okay. So we have two investors who are interested in investing. Investors who have follow-up questions. I do have a lot of follow-up questions on this, but okay. A lot of investors have follow-up questions, so you can connect with them offline. Great presentation, Yash and Chinmay, and thank you so much. Moving on, we have with us Easy Legal, which I think is a startup which a lot of founders will probably relate to as well. It's an AI-based legal technology platform which provides legal consultation to individuals and small businesses through a prepaid recharge model. Customers can top up wallet with talk time minutes and consult an expert lawyer. And this consultation is delivered on demand. No appointment, no waiting, right advice anytime, anywhere. They've already done an ARR for about 1.5 CR and witnessed about 30% repeat purchase. And they already have about 1,500 lawyers on board. We have with us the founders of Easy Legal, Malay Mandal and Nitin Nijavan. Can we have a big round of applause for Malay Mandal and Nitin Nijavan, please?
Good afternoon, ladies and gentlemen. My name is Malay and I'm the founder of Easy Legal. With Easy Legal, we aim to make legal inclusive and accessible to all. So essentially, we target legal is prohibitive. So legal is prohibitive. What I mean to say is that the large mass of Indian population, the middle class Indian 350 million plus, find it very difficult to access a lawyer. Finding a lawyer is the biggest challenge. Then the entire legal process is very uncertain. There is no transparency into how the matter would be pursued. And essentially that brings up the cost of the engagement. So the customer has no choice but to either accept or not to enter the legal space. So then what does he do? And it's a large population. The lawyers are not interested in serving customers who have a lower paying ability, who offer a lower billing opportunity. And so this opens up a large opportunity of customer base where there is a need for legal, but there's nobody who is able to offer solutions that matches the customers. So the solutions that we looked at and what we can offer to this segment of population is, one is how can we break down the entire legal journey into small microservices so that the customer is able to, say for example, is able to take a legal advice or a legal consultation quick and easy and then decide whether he wants to pursue the matter ahead or not. How can we have verified lawyers on the platforms who would deliver this service so that the quality of the service delivered is, there's no compromise on the quality that is delivered, and there is the timeline is strictly under control. How can we standardize the price? Right now, the biggest problem with legal services is that there is no MRP for the lawyer's fee. How can we bring about a standardization in the price so that when a customer comes, what he sees for that particular service, the price that he sees is what he pays, and he sees what all he'll get, the deliveries he'll get out of that. So that brings in more trust in the customer, and that allows him to pursue the legal matter ahead. And obviously somebody has to take the end-to-end delivery ownership. What I mean to say is that the lawyer is a professional. What he's delivering, we are nobody to comment on what is the service that's being delivered. But somebody's got to ensure that the customer's delivery happens within that timeline and up to the customer satisfaction. If the customer has any issue with the lawyer or the service delivery, then there should be somebody who's able to listen and take and play the role of finding the satisfaction for him. Okay, so the market study that we did, as per our estimates, the total market size, the TAM in India is close to $20 billion, and the addressable, the SOM market that we are looking at is the $5 billion market, which is for this moment more concentrated around metros and tier 1 cities and targeting the population which is in the age group of 21 to 45, so that there is high digital adoption, and the small businesses, essentially the MSMEs, the organized MSMEs and the startups. So the target customer that the segment of the population that we are targeting are individuals in the age group of 21 to 45, as I mentioned, and small businesses. So we segment these two businesses as personal legal and business legal, and this is the underserved population that we are targeting. So what we've done is, under the personal legal segment, we've come up with small micro-size services such as legal advice, legal consultation. A legal consultation is a fully automated legal advisory service where the customer can come, recharge his account with talk time minutes, and as long as or as many minutes as he has, he can talk to the lawyer any time of the day, night, whenever he wishes to. There is no restriction on the number of calls that he can make, or there is no restriction on the number of lawyers that he can speak to. He can continue, he can keep coming back, he can continue speaking to the same lawyer, or he can choose to take a second or third opinion. So, and this service has, this was the first service with which we went live, and this was, we've seen tremendous response to this particular, because there is nothing of this kind that exists in India. And we even get calls in the night at 2 o'clock, 3 o'clock, where there is a lawyer attending to the call, giving advice to the customer. Then the other big service, the beyond consultation in the individual segment, the service that we have and which is also picking up slowly is property legal. In this, we offer all kinds of standard property services such as will registration, gift deed registration, power of attorney registration, sale deed. So in the last 12 months, we have done more than 100, we've registered more than 100 wills across the country. So we have lawyers and paralegal agents, we've acquired them across the country and anywhere. So if you want to get a sale deed or a power of attorney registered in, say, Nagpur, we get it done. So the entire drafting happens here, and then the registration happens at the sub-registrar office there. Then there are a lot of legal documents which the customer requires, such as name change, legal hire certificates, indemnity bond, affidavit. And these are what, at 2,500 rupees, 2,000 rupees, notarized, home delivered. The document is signed and delivered to him at home. So this offers a very convenient way of accessing legal services where the customer doesn't need to go out in the market, go search for a lawyer, and then haggle, negotiate on the pricing. On the business legal side, again, we have a similar service, the business legal consultation, where a startup founder can talk to a company expert lawyer on any matter related to company law, intellectual property, employment, labor law, and so on and so forth. Then agreements and contracts, all startups, all
3 minutes
minutes left for the pitch.
Require agreements such as employment contracts, policies, franchise agreement, vendor agreements, MOUs. So this is a quick and fast way where they pay, the lawyer speaks to the customer, delivers the draft, first draft, then the customer has 2 iterations to get these changes incorporated, and registrations and all kinds of registration and licenses that we offer. This is the snapshot of the customer interface. This is the lawyer dashboard where the lawyer can see every assignment that is assigned to him, the billing, the negotiated price for that assignment, how much money he'd get paid after he delivers the service. So this kind of a visibility with the lawyer brings in more stickiness, more loyalty for the lawyer to stick to this platform. And there are some lawyers who have now reached a stage where they are generating close to 80,000 to a lakh rupees of billing monthly from our platform. So legal consultation service, as I spoke about, it's a fully automated service where a customer comes by stock time, he makes a call on that number 8929, he consults a lawyer, rates a lawyer, and depending upon the rating and the availability of the lawyer, the system always, when the next call comes, the lawyer is picked up whom to be connected. This is the tech platform. This is how do we compare with competition. So there are companies like Vakil Search, India Filings, Online Legal India. So Vakil Search being the biggest player in this space, they primarily focused on business legal space. Nobody is targeting the personal legal, the property and all that stuff. That's where the play is, and we are seeing good traction, and that's where we want to focus on. So in the last 12 months, we are now averaging at a monthly. Last month we did a 10 lakh, around 11 lakhs of monthly revenue. This month we are projecting 15 lakhs. So we are close to 1.5 to 1.8 ARR. And we have more than 1,500 lawyers on a platform. And every month we are delivering more than 15,000 minutes of consultation. So in total, thus far, we have delivered 1,25,000 plus minutes of legal consultation. That many minutes of talk time has moved through our platform. People have spoken to lawyer, they've taken legal advice with 30% plus repeat purchase. And so far we have served more than 5,000 plus customers. So these are some of our recognition. We were the winners of the incubation challenge at IIM Ahmedabad CII program, where we were granted a...
Time is up for the pitch. We can open the floor for questions now. Investors who would like to questions can raise their hands and ask the questions.
How do you select the lawyers? I mean, is there a grading for lawyers which you have?
Is that?
How do you grade the lawyers?
Rating.
Grading.
Okay. So what we've seen, the kind of services that we offer all kinds of non-litigation services. So which means they are standard in nature, they are transactional in nature. So we focus only on lawyers with 5 to 10 years of work experience and who have decent amount of exposure, experience in that area. So when we do the lawyer selection or the lawyer onboarding, we make sure that the lawyer comes within this experience range, plus he has the experience. And when we speak to him, we also test and assess his knowledge or the skills about doing that or delivering that, the work that he claims to be specialist of. And once he's onboarded and we've done our internal assessment, and the customer in his first assignment, then he rates the lawyer, and that's how the rating of the lawyer starts building.
So you keep rating on a continuous basis, but then first thing is you do it manually for 1,500 plus lawyers. That's what you have done yourself.
Yeah. So all 1,500 are not the paid lawyers. The paid activated lawyers who get paid assignments are only 70 or 80. That's the large mass of lawyers that we acquire. And the lawyers keep coming, registering on a platform. And so we build a captive lawyer database.
So when you have the expertise, you must be having this rating, the first level, the second level, first preference, the second preference kind of thing. Is it all built in your system, automated system?
Yeah.
It's all built in your automated system. And how many of these customers who came to you came back to you for different set of services?
So 30% is the repeat purchase rate.
Repeat purchase for the same type of service or a different?
So
if I'm coming for legal, for say property, I'm going to come something for say business or succession planning.
Yeah.
How many of these will they?
So I'll tell you, roughly around 22% of the people would have repeated their same legal consultation minutes purchase. Business customers, which is primarily startups at this stage, they roughly around 30% or so have repeated their purchase. So initially they came up for say a private limited incorporation, then they came for agreements. They wanted to get a few agreements drafted, like a co-founder agreement, employment contract, consultant agreements. In the case of property, somebody who came for power of attorney registration, a few of them also came back for a will registration because they saw the service, the convenience, the ease. And so roughly around 5 to 10% would have repeated their purchase in another property, or some 1 or 2 business services also they've taken. It's all about getting used to, habituated to using the platform. Once you use it, they like it, and then that's how.
Right. My only reason was that if I got a solution for property related matter from you and I'm satisfied, I'll come back for property. That is very obvious. But if I'm really happy with you,
yeah,
and if I trust you, then I'll go back for some other services.
Yes,
also.
and that happens. So in the last 12 months, we've been able to, so all our customers, majority of them, we try and push them for giving us the ratings. Some give the ratings within the platform. Many others, they give us a rating on Google reviews. So we have close to 180, 4.8, an aggregate of 4.8, and that's what we are working on. So customer satisfaction and the customer experience is what we strive for. At this stage, we're not so much concerned about whether we make money or we lose money. That's where we want
So what if the lawyer doesn't deliver on time? Do you give the money back to the customer? I'm just kidding.
No, so far of the 1 crore plus revenue that we've done, our total refunds have not been more than 2 lakhs.
So you do refund?
I'm sorry?
So you do refund the money?
Yeah, if the customer, so these refunds were majorly for 2 reasons. One is they paid the money, but they actually didn't get the service started. They wanted to get a power of attorney done, but then probably the need for power of attorney.
Right.
And in a few cases, initial days, their customer, the lawyer couldn't deliver the service up to the satisfaction. The customer was not happy, we refunded. But we learned the process, where we are failing. And then now in the last 7-8 months, we've hardly given any refunds. Because we are improving the process, we're building it in the platform. And these are all pretty standard process. The will drafting and registration is a standard process, power of attorney. So we are putting it that the process in the system so that the lawyer moves from one step to the other and there's no we reduce the chance of failure.
Nice, thank you.
Malay, I have about 3 questions. One, who in your team is a lawyer himself?
So we have, shall I move the slide or do I?
Yeah, tell me.
Okay, so there is a lawyer called Devansh Gandhi. He's our head of legal operations. And he's a practicing lawyer at the Delhi High Court. And he takes up his few assignments in his individual capacity, plus 70% of his time he gives to us.
Second question is, what's your biggest challenge?
Our biggest challenge is on the personal legal side. Legal consultation is a great product. And what we have seen, the customers who have found us, they have lied, and as I said, 22% have went back and repeated their purchase, and they keep repeating. There are customers who even call in the night at 2 o'clock, 3 o'clock. They believe the service, they come in the night, they call, primarily for divorce and family matter related issues. How can we scale this up? I mean, because the more we try to reach out through digital methods, our CAC increases. And the legal consultation is a very low valued service. So it is per minute pricing. So you buy 15 minutes at 555 rupees, you buy more minutes, the price reduces. So we are looking and thinking of innovative ways of partnering with, so say for example, if we partner with say NGOs which are working in women empowerment and those kind of, so if we by way of through them, if we can get the reach to the women who have family problems and would like to take a legal view, legal opinion, try and understand their rights. So those kind of partnerships would probably, but right now the challenge is that it's a great product, we're seeing great traction, but how do we get the maximum reach?
And what's your situation on profits today?
I'm sorry?
What's your situation on profits today?
Profits. So our lawyer payout, the fees that we pay, the rates that we have negotiated with the lawyer, is in the range of 40 to 60% on an aggregate level. At a monthly level, 55% is the net outflow that goes. So 45% is a gross margin that we make. We are trying to bring this down by more further standardization and using tech to drive, because a lot of questions that come from the customers are very pretty standard in nature. So we are working on AI-driven bots that can at least answer the basic standard questions, and at the stage where we feel that it requires personal, That's where when we can then move it to the lawyer. That will probably help us increase the value of the consultation minutes that we sell. That's number one. And number two is will also help us mass acquire customers because we are at least giving them a free entry point to the process.
Data information only on the app, or is it also by way of email?
No, it's completely on the platform. So even the documents that are exchanged is completely on the platform. Nothing moves out. Both the lawyer and customers' numbers are not shared. They, whatever interaction they have to have, they will have it via the platform. So the platform is so smooth and seamless that if, say, you have to speak to a lawyer who's working on your assignment, all that you have to do is dial on that same number, 8929889922. That's the common number. And there are three options, 1, 2, 3 for personal matters, business matters, number 2, and number 3 for any kind of document or registration. So your number is linked and the call will just go. It's the same. Yeah, whichever we assigned that assignment. So your number is the primary identifier, and that you have an order and say lawyer X has been assigned to that. So it just flows, the call flows. And many a times the lawyer is not available. So the customer can even schedule a call. He can just, so then at that particular time, the call will originate. First, go to the customer's mobile. The customer will pick up the phone. When the customer picks up, the call goes to the lawyer. The call is scheduled. So both of them, they get connected and they talk. So minimal human intervention. That's how we're keeping very low on operations, tech driving, low cost, affordable legal services in a convenient manner.
Many a time on other platforms, we have seen that the service provider takes the call offline and tries to increase his own business rather than the app business. So how do you prevent that?
Okay. So the charges that we have, and if you go to our website, if you see the prices, they are quite low. So we have lower rates, lower than what the rate that you see for the customer negotiated with the lawyer. So the lawyer pretty much doesn't have much incentive to try, and because the customer has come here because of one of the primary reason is obviously the cost, because that is that's why the lawyers are prohibitive, because they charge more. So the lawyer doesn't have much incentive to try and, because how will he get him to pay more? That's number one. Number two is payment follow-ups. That is also time consuming. Here, the lawyer doesn't have to follow up on payments. Every assignment that goes to him is a guaranteed paid assignment. The customer has already paid us. The money is lying with us. We are holding that money. And we do once a month settlement. So for all the assignments that are closed, completed in the previous month. So they get paid out on the 6th of every month.
Great. So I think we're done with the questions for now. We will lapse the time for now. We can take more questions offline. So yeah.
Thank you.
Guys, can we have a big round of applause for Easy Legal, please? All right. So far we've had 7 exciting pitches across various domains, and now we will be breaking for lunch. Just quick heads up about where the lunch is for founders and investors. Investors can step out and take a right where the high tea happened previously, is where they can have their lunch. Founders can step out and take a left, and there will be a room where they can have their lunch. We will break for lunch for now, and about 30 minutes of time we join back for the next round of pitches. Founders who are a part of the Samrit program, I would request you to go to the reception for having a picture with Mr. Jeet, right? So these were a couple of quick announcements that there were from my side, right? So we can break for lunch and join back in 30 minutes from now, right? Thank you so much. Oh, investors, please, I'm sorry, I forgot that. Investors who are interested in Easy Day, can you please raise your placards so the Amity team takes note of this? I'm really sorry for that. Do we have interest for Easy Day so far? all investors and founders, I would request you all to please settle down so that we can start with the next pitch. We will be starting with the next pitch in the next 1 minute. So would request you all to settle down. Awesome. So now that we've hopefully had a good lunch and a bit of interactions with fellow investors and founders, we can now move on to the next round of pitches. Next up, we have with us Yugis, which is a pretty interesting startup, which is India's first liquid wash, especially created for hand washing undergarments. Currently, India's most trusted brand for intimate hygiene products, which are well researched and functional. They currently have an MRR of 18 lakh plus and are operationally profitable. And they have a repeat rate of over 40%. Please join me in welcoming Samiksha Yadav and Rahul Tyagi. Can we have a big round of applause for Rahul Tyagi and Samiksha Yadav?
Good afternoon, everyone. My name is Rahul.
Good afternoon, everyone. I'm Samiksha.
We are the co-founder of UGs. So I want to start with a question. How many of you hand wash your underwear yourself? Can you please raise your hand? Okay, 1, 2, 3. Wow, the number is more than I expected. Amazing. So, okay. So there are two major problems. One is the process and second is the product. So the process of hand washing undergarment is tedious and time consuming, as you need a lot of water and repeated rinsing to actually remove all the detergent from the cloth. Otherwise, it feels stiff after trying, right? Probably some of you must have experienced this. And another is the product. So the product that we are using are the regular detergents, which are formulated to remove tough stains from the cloth, which has nothing to do with our underclothes. Like our underclothes and outer clothes are exposed to totally different kind of environment, right? So all we need is a specialized product which can effectively clean the cloth as well as disinfect it and is safe on skin and cloth. So according to a survey, in India, around 45% of, So in India, according to a survey, around 45% of men and 85% of women are in habit of hand washing their underclothes every day. Okay. And I just told you the problem. So to counter this problem, we came up with the product called UGs. So UGs is revolutionizing the process of hand washing underclothes in India. So the product is made out of 100% biodegradable ingredients. It allows one to wash their clothes in just 60 seconds. Comes with antimicrobial properties, so no need of disinfecting separately. And it costs under 1 rupee. So the market opportunity for this single product, these are very conservative and practical numbers that we have taken. So if I talk about TAM, in India and other Asian countries and some Middle Eastern countries with similar hygiene habits, our TAM stands to be around 10,000 crore rupees. In SOM, we have considered only menstruating women living in urban areas of India and who are online shoppers and with high disposable income. So which comes out to be around 4,200 crore rupees. And in SOM, we have only considered menstruating women who are living in metro cities of India. So which is around 900 crore rupees for us. Samiksha.
So I will take you through the traction and the progress that we have made so far. So within an year, we have acquired 22,000 customers and 55.5 lakhs. We are growing at a rate of 40% month on month and are growing at a rate of 124% quarter on quarter. And at this rate, we are projecting to end the financial year 22-23 at 1 CR. So currently we are only selling 2 SKUs, and with the help of just these 2 SKUs, we have been able to grow very systematically in last 3 months. So we have done a revenue of 6 lakhs in November, which grew to 9.4 lakhs in December, and a remarkable 18 lakhs in the month of January. So currently we are only present online, selling through our own website and Amazon. And I feel pride in sharing that most of our revenue, that is 72%, is coming from our own website. So interestingly, we do not have any direct competition both in the domestic and international market. However, there are few players who are selling concentrates for washing delicates in the washing machine. But these products and options are either not sustainable or safe, or are not economical for common users. So we have actually created a new vertical altogether. UG's undergarment liquid wash is a leader in making, with such an immense potential to grab such a huge market out there. So with increase in consumer base and a retention of 30%, we are actually trying to leverage this opportunity and offer more products in the range. And by popular customer demand, we are launching our refill pack in next 7 days. We'll be launching 6 more products in next 2 months, starting from a fragrance option of UG's liquid wash, bio intimate cleanser, active wear spray, and bio shaving kit. All of these products have been developed on the concept of sustainability, clean formulation, free from any harsh chemicals, and are sustainably packaged. What I'm trying to say is, while all these other products will act as supporters, our hero product, UG's undergarment liquid wash, is what we believe is the next Colgate or Surf in the FMCG market. And that is why we are standing here today, seeking to raise 2 crores of funds to achieve this goal. So most of these funds will be utilized in marketing activities to increase our customer base, both in the domestic and international market. And rest of the funds will be utilized in new product development, developing a team and stocks. We are projecting to grow 20 times by the end of financial year 23-24 and do an ARR of 21 crores. Now I'm going to share the most important part of this presentation, which is market validation. So not a day goes by without receiving any messages from our customers. And we do not just receive like 2-syllable messages like nice product, good product. These customers write big messages. They share their experience with us. I want to draw your attention to 2 main messages that we got from our customers in the center. So both of these customers have a skin condition called psoriasis and eczema. And that's actually stopped washing their underwear due to this condition because the existing detergent contain harsh chemicals and that would flare up this condition. Now these customers are using UGs for more than a month now and are very happy with the product. So we are actually solving a real problem here. These are not just the only messages. We get so many messages and there are hundreds of messages which we can share a list with you all. So all I'm saying is that the product already has a market validation. We only need your support to make it big in the market and make UGs available in each household where someone or anyone is washing their underwear by hand.
Thank you. Open for questions.
Any questions?
Folks, do we have any questions?
Hi, am I audible? Yes. What is your manufacturing capability and where you are manufacturing this? And second, are these products OTC products or do you require any certification?
Okay. So, sir, the products are currently being manufactured in Guinea Filaments Limited, Haridwar facility. It's a FDA approved plant, and we are also certified to export these products to American market as well. Okay. And sir, sorry, your second question. Okay, yeah, sir, it's a OTC product. It is an OTC product essentially. Yes.
And
sir.
Formulation.
Sir, actually the formulation was developed by us with the help of our in-house team, and we have signed non-disclosure agreement with the manufacturer. So the formula is closely guarded with us, though there is no patent or any such thing, because it can't be done on the formula side. But yes, it is with us. Like, and we have only disclosed. Sorry, sir.
Any testing, like your claim, whatever you are making.
Yes, sir.
Is there a base of any
Yes, sir. Yes, sir. So, sir, with every batch that is produced, there is a clinical test done, like microbiome test is there. And we also, the raw material that are being sourced from different vendors in the country, they also give declaration of whatever claims they are making. So, yes. In fact, sir, just to tell you, the surfactants that we are using, they are derived 100% from coconut oil. So, similarly, all the ingredients are 100% sustainable. Yes.
One question on the revenue side. What portion is your D2C revenue and what portion is through marketplaces?
Sir, it's 72 and 28. Like 28 from the marketplace and 72 from our own website. Yes. Sir, the cost of manufacturing. So, sir, we have the gross margins of 76%. So it's 23 to 24% the cost of product.
And how much are you raising and what is the valuation you expect?
Sir, we are currently looking to raise 2 crore rupees and at a valuation of 18 crore. 18, yes, 18.
All right, I think these are all the questions that we had. I think we can close the floor for questions for now. Thank you so much, Samiksha and Rahul. Can we have a big round of applause for Samiksha and Rahul, please? Before I announce the next founder, do we have Siddharth from Zarwin here? All right, great. Great presentation, Samiksha and Rahul. Before we introduce the next founder, we'd like to know investors who are interested in UG's. Can you please raise the placard with "interested" as the placard so that the Amity team can facilitate further discussions? Okay, so we have 2 investors who are interested in. Okay, three investors who are interested in UG's. Okay, investors who have follow-up questions, can you please raise your placards if you would like to discuss things better offline? All right, so we have 5 investors who would like to discuss things better as well, right? So Rahul and Samiksha, you guys have conversations to do. So please take things further offline and Amity Technology Incubator will facilitate further conversations, right? All right, great. I think I would now like to introduce the next company, which is Zarwin, which is in a pretty exciting space of no-code in AR. Very exciting space again. Zarwin is building a Canva for web AR. It is a no-code platform for designers, architects, developers, and marketing professionals to create web AR experiences in just a few minutes. Zarwin is the most robust web AR toolkit for companies who want to push the boundaries of creativity and storytelling. We have with us Siddharth, who is the founder of Zarwin. Can we have a big round of applause for Siddharth, please?
Good afternoon, everyone. I'm Siddharth from Chennai, co-founder of Zarwin. So Zarwin is a no-code platform for 3D designers and marketing agencies to create immersive web AR experiences to visualize and share any 3D products. Essentially, in a nutshell, we're Canva for web AR. So what's the problem we are trying to solve? So ever since recently, online shopping and physical first approach has been broken. 2D images and just browsing through a product is not enough to convince the customer. The return rates are higher. So people look for new ways to sell the product or market the product or help their customers visualize the product through AR. And now there's another problem that comes again. The cost to build an AR experience for a product designer to approach a development agency, get the cost and do all of that is very expensive and time consuming. So we've eliminated the barrier and enabled the product designers themselves to create a web AR experiences in just few clicks or few minutes. What is the value proposition that we bring in? So this lets customer try their product in their homes, like if it's a furniture or it can be a bag, it can be any product. In fact, even a house model from an architect that you can walk around and see it through AR before you give them any feedback or confirmation of that sort. This decreases the return rates for many products that are shipped. It enables a new marketing experience. It helps the designers themselves visualize the product in AR and make iterations as they please. So let's see a quick demo. So this is publishing an experience. There's also a video. So you can create, there are many templates that you can choose from in Zarwin, and you can just upload the 3D model that you have with you and then publish an experience where you'll get a QR, and this QR or web link can be sent to the customer where they can scan and place their product in their homes. On the left side, it's a complete model of a spa. So basically you can walk around a spa or a room that you get from your architect. On the right side, you can consider it, you're buying a chair from an e-commerce site. They can leverage Zarwin to enable their customers to have this experience. Yeah, so there's a quick video as well. Let's look at. How Zarwin dashboard looks like and how you can create it. This is just a sample of how the visualization experience is there for the customers. So moving on. So who can use Zarwin and what is our TAM? I'll come to that. And 3D creators, basically interior designers, architects can use Zarwin to send their customers, instead of a video, 2D video, walkthrough video or images, they can send them this experience link so that they can see it more realistically and in real time. Addressing the TAM. So we are focusing on creator as well as the agencies. So the creator market are product designers themselves who are adopting to AR already, but there are also product designers who are learning about AR and coming into this market, who we have in our customer base as well. Coming to agencies, marketing agencies that are leveraging, that are working for furniture companies, that are working for many product companies, need creative ideas, creative marketing ideas to do that. And they now rely on development agencies or many other softwares, multiple softwares that still require coding knowledge to do the same, which is also our TAM, where we help them adopt to AR. Specifically on our customer focus profile, there are interior designers, product designers on one side, and the marketing agencies on the other side. We're a global product, so we already have customers. So our current focus of outreach is in USA, and we have more than 100 free registered users. We launched in November 1st, and we only have like 3 paying customers, but this is our focus profile. Positioning ourselves in the competitive landscape, we fall under the no or low code platform. We are purely no code when compared to our competitors who still supply SDKs, which need a lot of training for developers to integrate with their platform and publish these experiences. So we offer, easy drag and drop method. There is no code involved, and this works on a browser. You don't need to install any application. It is OS independent. It works on Android, iOS, or Tab, and you just need a URL that anybody has to open, and the AR will work. Our revenue model is a pure SaaS subscription model. So we have a free plan, which is just for people to try out initially, get the feel of the product. And then starting from $29 subscription up to $120 subscription per month. We also have an annual plan with a discounted model. myself, I'm the co-founder and CEO. I have my CTO Nibi with me, who completely drives the product. And we have Sriram, who's our COO. And there is another Sriram Sankaran, who's in our advisor board and who's into the industry of construction, who helps us with mentoring the product. We are backed by Meta XR program, where they're pushing the adoption of metaverse and AR. And that's also part of METI. And Arvind Panisamy is is in the leadership team of Freshworks, and he's also guiding us in our go-to-market strategy and SaaS. So what is the X factor? So in summary, what really helps us stand out and what really makes people want to use this? The first key factor is we don't need any coding knowledge to use the platform. Anybody can just hop on the platform, just like a Canva, they can just choose a template, upload a model, and then use the platform. The end output is also not dependent on any application. So we are platform agnostic. And then we are enhancing
3 minutes left for the pitch.
Thank you. So we are enhancing the virtual first approach, enabling people to have a better shopping experience, better marketing experience for the agencies. And we basically are an AR marketing tool for the agencies. Our traction is since we're almost 100 days into launch, and we have conducted more than 100 user interviews of our early users. We have 100 free users, 3 paid users, and we still have 1,000 people who are prospects who are in our wait list and still looking to sign up for the product. Our total fund ask is about 1 crore, and we already have 60 lakhs of soft commitment from METI and the Meta XR program. And we're looking to scale this product to basically reach out globally to more people and help the adoption of metaverse and AR in the industry. Thank you. I'm open for questions.
Investors who have questions can raise their hands and ask any relevant questions.
What is the best use case for your platform right now? You have like 8-9 use cases, but which is the one which is actually performing well for you?
Currently, the one that we have a lot of users adopting is for AR marketing. So there are marketing companies who have e-commerce sites as their customers, who want to give better marketing and better CAC for their customers. So they leverage this to provide AR marketing experiences for different customers. For example, a furniture store owner, and then for a real estate owner who wanted an AR experience on scanning the model of a house to keep it there and look at the house. So AR marketing, I would say, is the major right now. And the secondary would be designers themselves who want to give their customer a mock-up. So I'm a product designer and I'm designing a wardrobe for you. I would prefer to send it to you in AR rather than just an image. So that's another strong use case, that traction that we've been seeing from our users.
And any use case in education?
Education, there are a few outliers. I would say 1 or 2 people who are planning to use it, like animated models for education. But it is not really focused on that, but because they have to create the experience through our platform. It is more of a self-serve, no-code tool. So education industry people are more looking for ready-made solutions with content available. We don't have content on the platform. People bring the content and we just give them the AR facility and for them to design the experience.
Right. So, look at a platform called Geometry. It's the same Geometry, GMETRI. It's the same thing for VR.
Okay.
Now they work with colleges like universities like MIT, but they are now based in US. They flip the entire model. They teach. So teachers use it to teach them. Now catching them young. So students who start using it right now, sitting in Amity, whenever they go out, they will be automatically using this for whatever they do, right? So that's just a thought.
Thank you for sharing.
Thanks.
Do we have any other questions, or we can call the pitcher app for now? I guess, okay.
So we have 3 customers, in 2 from a $29 plan and 1 from $79 plan. We just acquired them in February. We are just 3 months into launch. So our revenue is approximately $120.
I guess these are all the questions that we had. So we should be good. Great. Thanks, Siddharth. Thank you so much. Can we have a big round of applause for Siddharth, please? All right. So the next part of the pitch is we'd like to gauge investor interest for Zarwin. Investors who are interested in investing or considering investment in Zarwin can maybe raise their placards. Do we have any investor interests for Zarwin? Okay, we don't have any investor interest for Zarwin so far. Investors would like to have a follow-up discussion or maybe ask follow-up questions with Zarwin. Can you please raise your placards? Okay. So we have two people who would like to discuss things further and have a follow-up discussion. So yeah. Great. So next up we, all right, great. So next up we have with us Erisha. Erisha is making people smarter and the sky safer. It's an early stage aviation tech startup, initially focusing on digitizing and simulating and learning on training experience of aviators who are directly responsible for the safety of an aircraft and its occupants. Focus areas of commercial and military aviation. This company has already received an LOI from the Indian Air Force and Indigo. We have with us founders of Erisha, who are Pragati Srivastav and Captain Tarun Java. Can we have a big round of applause for Pragati Srivastav and Captain Tarun Java?
To switch it on.
Good afternoon, ladies and gentlemen. I'm Captain Tarun Java, a senior commander with an airline with over 22 years of flying experience. If I would have talked about aviation travel 20 years ago, there were hardly a handful of people who flew in the aircrafts. Today, everybody flies in an airline, and air transport has increased exponentially in the last few years. We see one year, an air crash by Yeti Airlines of an ATR 72-500, state-of-the-art machine in turboprop class, which even Kingfisher were using. I flown that machine for about 4,000 hours. And can you please the next slide? That aircraft crashed last month in Nepal. Pilot error. We also had a crash of a Sukhoi 30 MKI with Mirage 2000 during a training session. Pilot error. Next slide, please. There were two such accidents of Air India Express, one in Kozhikode, one in Calicut. In both these scenarios, the pilot error and the aircraft overshot the runway with some fatal casualties. Pilot error. Also, there was some deficiencies found by the investigation agencies, that there were some shortcomings in the airport. Therefore, this caused this kind of catastrophe. Inadvertent flight deployment of Airbus 380 in Emirates. Huge cost for the airline. The pain pointers, inadequate training of cabin crew. Next, please. Okay, we are creating this Sukhoi 30 MKI cockpit for Indian Air Force to make the training better. Can we go back to the back page? As you're aware that now Air India has placed an order of 840 planes. Out of that, 500 aircrafts are confirmed orders. We see a huge boost in Indian economy, especially the aviation industry. But when we get this kind of aircrafts, we also foresee these kind of accidents because of lack of training. I'm a trainer myself. I've been training a lot of pilots, and I see the cost involved in training a pilot is very, very high. So we try to train a pilot in 2 hours for maximum emergencies. So we are not able to, impart that kind of knowledge or training to the student pilot or even a cabin crew to the adequate standard of safety. Why? Because the cost of simulation is very, very high. We want to replicate this in AR and VR to reduce the cost and make the sky safer and travel safer for everybody here, and including getting the cost of training down for the airlines so that they can offer tickets at an affordable price. I'll hand over the presentation to my wife now, who's also a co-founder with me in Erisha Technology Innovators.
Thank you.
Good afternoon, everybody. Welcome to Erisha Technology Innovators. We are the founders of Erisha Technology. Our aim is to make people smarter and hence make the sky safer. Our team consists of Captain Tarun Java and myself. We collectively hold an experience of almost 35 years in the aviation industry. I've flown as a cabin crew with Premier Airlines of India like Kingfisher Airline, Air Deccan, work with flight safety in Air Asia. I've flown with Indigo and I was also a quality auditor. Captain Tarun has also flown with Premier Airlines like Kingfisher Airlines, Air Asia, Go Air, and currently with Vistara. And yes, that's the main team member and she's the motivation behind the entire team. So what is the problem statement that we are trying to solve? Currently, since I think the training started, aviation training started, 98% of the training, I mean emergency training, is theoretical or classroom based. You can see the textbook and the last picture, which is the physical simulators, they're almost just 2% of the entire training and they're so costly and they cannot be frequently used by the crew to train them in real-time situations. So definitely for us travelers, lack of real-time hands-on training is directly proportional to unsafe air travel. One by one, we'll go through it. The learning pyramid says that the listening, reading, or audiovisual constitutes just about 5 to 20% of the knowledge retention rate. Whereas if you do the same thing in experiential training, your knowledge retention rate dramatically goes to about 90%, 75 to 90%. So this will dramatically improve the performance of the crew. If we talk about the okay, this side is gone. Okay, so if we talk about the expenditure by the airlines, they spend crores of rupees. Almost 75% of the airline expenditure is the operational expenditure, and in operational expenditure, around 30% is used for training and labor costs. And you can see here, just for pilots, just for the simulators, they are spending about $4.5 million. And the diagram is not here, but I'll tell you, for an airline which owns about 200 aircrafts, just to train cabin crew, the cost is about 12 crores a year. So that is a huge amount. Now the inadvertent slide deployment that we were talking about, recently in January, British Airways, there was a case. The first day of flight, there was a crew just fresh out of training. This incident happened and it costed British Airways about 50 lakh rupees just for the incident, and you can add on the cost for hotel and delay and all of other things. So it is a huge cost that is involved. The International Air Transport Association states that these incidents cost the airline industry over $20 billion each year, and these can also be fatal. This was a ResearchGate study which was conducted on a set of cabin crew, and they were asked to demonstrate a first aid practice on a casualty. And they found that their theoretical knowledge was very good and up to the mark. But when they demonstrated it, 33 out of 35 people failed to use the bag mask, which is called the ambu bag, correctly, which is a very important part in resuscitating the breathing for the casualty. And you can see what all has happened. Only 20 plays the AD pads correctly and so on. So the conclusion was that this
3 minutes
suggests
left for the pitch. 3 minutes left.
that existing approaches to training of crew require further investigation and modification. Again, one more study of Air France, wherein the investigation report said that these events resulted due to lack of practical training of the pilots, and everybody on board, 228 passengers and crew were killed on flight. The solution is customized experiential training. It will help combat risk, reduce the cost of training of airlines in India, and it is the first of its kind in India. We'll do 3D digital simulations of the aircraft itself and the emergency situation so that the learners can get a real-time experiential training of the as close as possible to the real situation, be it passenger evacuation or any kind of catastrophe. Conducted via virtual reality, very important. So you can compare the classroom, e-learn and VR experience. It can be a thing that can be done in just half an hour, takes in classroom 2 hours and e-learning 45 minutes. So the airlines can reduce their training time and budget dramatically by using this program. So the market size of the aviation industry, civil plus military, is $850 billion globally. For India, it is approximately $40 billion, growing at a CAGR of 15%. And if we talk about specifically aviation, AR and VR market, civil plus military global, 2021, it was $0.91 billion. By 2031, $23.6 billion is the scope and CAGR of 39.2%. So this is a table that we have accumulated that by using our program, how much the incident accident cost, how much the training time will reduce and the performance increase. Our unique selling point is, of course, we have the first mover advantage and we want to keep that. We have the domain expertise and hence it is easier for us to connect to the consumer. We are offering 6 degrees of freedom. What it means technically is that a lot of VR programs right now offer 3 degrees of freedom, which means you can sit or stand and the entire VR experience will be moving around you. You will be centralized. But here you can move inside the entire setup, inside the entire aircraft, interact with the equipments, anything that you want to do. And we have created a prototype also. Whoever is interested can actually experience it. It is a sustainable solution. You do not need expensive, the physical simulators that are currently there, which are not even useful as we have seen.
The time for the pitch is done. Okay. We can open the floor for questions now. Investors who have questions can ask their questions.
Yes, so we are 5 months old. Our prototype was launched just 5 months back, and we are developing a trial product for the Indigo airline for their cabin crew. So they have asked for 500 licenses. We are developing a certain kind of equipments and safety infrastructure for their cabin crew. Secondly, we are developing a Sukhoi model for Indian Air Force. It is a ground run simulator. So these are the 2 pilot projects that we are working on, and we are pre-revenue currently.
On the Indian Air Force contract, whatever is you're able to share, is it how many years lock-in? Is there a financial minimum commitment? Are there any commercial terms around that contract yet or not yet?
So this is the, we have signed one confidential NDA with the Indian Air Force that we will not discuss this or the cockpit thing. So we have, but what I showcased you was basically something available on the platform. So we are working with the SDI, that is a software development of Institute of Indian Air Force. It's a high security thing. And we have been invited to work in their laboratory and set up in their own laboratory in the SDI. And first we are making the Sukhoi cockpit for training of pilots, including air warfare, beyond visual range, instructors training, because Sukhoi is a tandem sitting aircraft in which the pilot and the other pilot basically handles the hard points, the weapons and all. So we are integrating the two so that even after wearing the VR, so both the pilots they can see each other, talk to each other, and instruct also. Something else you want to know about Sukhoi, sir?
So one thing I would like to add here, they are actually preparing for the Agniveer category. Yes. So for Agniveer, the government is trying to take batches and release them instantly or in a period of, reduce the training time. So they need a program that takes lesser time to prepare and train their people. So they are quite interested in this.
We have the figure for this. An Agniveer program is for 5 years. And the training period for, training one airman is about 1 year. So the effective service in the Air Force is about 4 years. So the program which we have discussed, we can reduce this 1 year training program to only 3 to 4 months. So that the effective service in the Air Force is over 4.5 years. Yes, please.
Hello.
Yes, please.
So I guess both of you are subject matter experts. Who is doing the coding behind all this?
We have our own software team which is doing this, employed by us.
So that is inbuilt?
Yes, it's inbuilt.
Okay, okay.
We have a team of 9 people at this moment.
And what is the total spend which has been done so far on the tech part?
The total what?
Total amount spent on the tech so far.
As of now, we have done only the POCs. We have spent a little over 30 lakh rupees just to create the basic POC.
30 lakhs with 9 people team.
Yeah, on the basic POCs. We had done 3 POCs. One is a basic POC for emergency evacuation, which we have already created on our AR/VR headset. Then we have secured a POC for Indigo, in which we have done emergency locator transmitter and one more was?
Another safety scenarios.
Safety scenario.
So how will you compete? So there are multiple companies which are providing these simulators,
yes,
both to private organizations as well as to Indian Air Force. Just I know a company in Gurgaon, flight simulation company.
Yeah, I know FSCC very well. I helped them to Captain Sanjay Mandavia is the owner. I know him very well.
So do you plan to sell it to them?
No,
or
not at all.
You plan to sell it directly?
No. So see, basically, I get these questions, from everywhere. That if I want to sell this to Frank Finn or AHA or FSCC, they are only there to basically teach you how to fly an aircraft. They do not cover you the pain points of the airline, that's the lack of training. They are the sellers. They want to sell you similar time for $500 an hour to train a pilot. And DGCA tells you, please, these 15 scenarios are to be covered in 2 hours time, right? So I'm paying $1,000 in 2 hours time to cover 15 scenarios. Can you cover 15 scenarios, 15 emergencies in 2 hours time? It is practically not possible. So the costs of training goes very high. We want to bring down that cost of training by using AR/VR headsets.
Okay, thank you.
And again, I would like to add FWSTC and other simulators, they are physical simulators. Ours is not a physical simulator. You can just create an aircraft anywhere, right here as well. You can yourself test it. The feedback that we have got till now is very motivating. And we had, in our POC, we had very limited features because of budget constraints. But since we have got positive feedback from the industry veterans, so we are, again, putting in more money to enhance the features. Yes. No, it is not.
It is not.
Yes. Absolutely, we understand. That is why we are here for investment right now. But it is not easily replicable because you need domain expertise and it is not out in the market and it will never be. Definitely, technology is an area which can be replicated in any industry. But aviation is an industry wherein the source of knowledge will not be available in open market. So that is, of course, one.
Yes, okay, I'll answer to that. See, as I told you, I've already flown in the industry for over 22 years. My approach to a particular emergency may be different than a pilot who's more experienced or less experienced than me. The problem comes where the SOPs are not aligned, okay? So I may react to a particular emergency in a particular way. The other pilot will react to a particular emergency in a certain way. So we will basically record the reactions, and then we will get the algorithms patented on this to streamline the SOP to bring down the shortfalls in the training system. That will be patented. That is going to be entry barrier for us.
This year itself.
Revenue,
this year itself. Yes. So once we are done with the Indigo POC and the Indian Air Force, we'll be getting into their training programs directly. And then we want to onboard one more airline for this year.
All right, great. Thanks so much, Pragati and Captain Tarun Java. Can we have a big round of applause for AirAsia, please? I think they had the cutest team slide. So yeah. All right. We'd now like to gauge interest for Eresia. Investors who would be interested in discussing things further and are interested in Eresia, can you please raise your placards? Okay, we don't have any investor interest right now. Investors would like to ask any follow-up questions to Eresia. Can you please raise your placards? All right, so we don't have, we have one investor who would like to ask follow-up questions as well. Great. All right, so before I move on to the next, okay, so there are two people who would like to ask follow-up questions. Okay, so before we move on to the next presentation, I would request two things. I would request the founders to not ask questions right now because we'd like to keep the floor open for investor itself, given the limitation in time with regards to asking questions. A founder only has 10 minutes to maybe ask questions to all the investors. So I would request only investors to ask questions in this forum. Founders can obviously ask questions offline. So happy to kind of do that. And secondly, we would request all founders, maybe at the starting or at the end of the presentation, give a detailed idea, just tell about how much they're looking to raise. It could be total check size, what they're looking to raise from the forum, and how much they're looking to dilute, right? And the instrument that you're using for investment. So it gives a sense of clarity to investors in terms of what the investment terms are. All right, so these were two quick announcements. Are these two mics together going on? Just give me a second. Okay, so these are the two quick announcements that I wanted to make. Now, without further ado, I would like to introduce the next company, which is in the EV clean tech and sustainability space. The company is called Adiabatic, and this company is aiming at reducing the carbon footprint by accelerating the adoption of electric vehicles. Adiabatic developed a smart and efficient lithium-based battery pack for EVs, solar energy storage systems, which is BESS. We have with us the founder of Adiabatic, Darshan Meher. Can we have a big round of applause for Darshan Meher, please?
Hi everyone, I'm Darshan Meher. I'm the co-founder of Adiabatic. I'll just hand over this hardware which goes inside the battery pack. It is called as BMS, Battery Management System. I would like to, just pass on to each and everyone. So I'm Darshan Meher. I'm founder of Adiabatic Technologies. We are a deep tech hardware startup based out of IIT Hyderabad. So all the founding team members are alumni of IIT Hyderabad. We started in December of 2020. We are supported by few incubation centers across India and including IIT Hyderabad. And so more than 1 million electric vehicles were sold in 2022 itself. And the numbers are expected to reach 10 million by 2030. But electric vehicles are on fire. There is a constant range anxiety, which is, degradation of battery health over the period of time, which is a common problem of electric vehicles battery pack, predominantly lithium-based battery packs. And there's a hardware reliability issue in terms of the BMS or any other hardware which goes inside the battery pack or electric vehicle. Because predominantly in India, till 2020-21, almost 95 to 97% of the electronics were imported in India. Gradually, due to strict, amendments and policies, there are few shifts which are, happening in India, and there's a boost for promotion to make in India, including the technology and hardware part. So that's where we are building technology for battery packs in India and for the globe. So are there any existing solutions for battery fires, reliability, or whatever problems are there out there in the EV industry? So currently you'll find some cooling system as a solution to reduce fires and everything. Then having a better supply chain for lithium ion cells from source, that is from China, Taiwan, or any other different countries, and having some safety mechanisms such as a normal BMS inside the battery pack. But are these solutions really solving the root problems? Because there are three major constraints in case of two-wheelers, in electric two-wheelers. The first being, you can't increase a lot of cost or in terms of value addition in two-wheeler. The second being, there is limited space available. And third being, limited energy available in the form of battery pack. And so as you know, the industry evolves, or you know, the adoption increases, there are another set of problems, such as you know, long service time of the repair of the battery pack and the cost associated for the, you know, servicing of the battery pack. So currently, you know, if there is a problem inside a battery pack, the time usually is somewhere between 2 to 3 weeks. So to overcome all these things, we are coming up with AIS 156. That is a, you know, amendment in the battery pack industry. That's all. So our battery packs are certified with AIS 156 standardization, and entire, including the hardware which I showed, that is designed by us in India. And it is integrated with the battery pack with the passive based thermal cooling system, in which there is no addition of, you know, energy removal from the battery pack. Still the battery packs are able to cool down, and we are able to, our main focus. The value proposition which we are giving to OEMs is, you know, the service cycle of the battery pack is drastically reduced from 15 days to 2 hours, based on the algorithms which we have, which are, you know, flashed on the firmware of the battery pack. And we extend the life of battery pack by close to 40-50% than the existing life, which drastically reduces the total cost of ownership by 1/3. And we are able to maintain the temperature of battery pack at around 30-35 degrees Celsius, irrespective of ambient temperature in India, which goes as high as 45-50 degrees Celsius in summers. We have also solved the global chip shortage problem, in which we have removed few of the most used ICs, integrated circuits, with the normal circuits which are easily available throughout India. And the battery packs are connected over the cloud with the help of BMS. This is just a demonstration of how, you know, the battery packs are cooled. In the first case, the battery packs are cooled by close to 10 degrees Celsius when the battery packs were charged and discharged in less than 60 minutes. And in the other case, the temperature difference with our battery pack and the normal battery pack was seen to be close to 20 degrees Celsius. And just to give you an example, for every, let's say on an average 10-degree rise in a temperature, you get a half the life of existing, you know, any system across, let's say battery pack or any system in this universe. So this is just the validation part. That is about the UI of the app which we have for the BMS. It's about the on-ground testing. So we have, like we have been part of few events as well. We were winner of few events. We have filed for 3 different design and utility patents. One is in the cooling system, the other one is for the battery management system, and third one is for the design of the battery pack. So yeah, just to give you a competitive landscape, apart from SOC, SOH, which are kind of a basic parameters which has to be given by each and every manufacturers right now from let's say second quarter of this year. Apart from those few things, what we are really working on is increasing the life of the battery pack, providing safety to the battery packs, and ensuring the performance of the battery pack doesn't depreciate over the period of time. So we are talking here about somewhere close to $150 billion market by 2027. Of which we would be targeting automotive industry that comprises of close to 40% of 150. Talking about Indian market in 2023, we are targeting close to $2 billion market, of which SOM would be close to $65 million, and the TAM is expected to grow at a rate of 60% CAGR annually. So talking about traction, our battery packs has
3
been
minutes left for the presentation.
Yeah, our battery packs have been deployed as a pilot batch of 50 battery packs on 50 different vehicles, and we have collected the data of close to 1 lakh kilometer. We have run pilot testing with 7 different OEMs and electric vehicle fleet operators, of which we have received few LOIs of 500 battery packs. And we started our manufacturing facility in December. So we have so far just completed 50 to 70 battery packs in close to 2 months time frame, generating 10 lakhs rupees revenue. And we have LOI of 1.5 crores, of which we expect our 2023 revenues to be close to 5 crores. This is about the unit economics. We have overall 20% margin for the battery pack as a product. So we would be mostly targeting B2B segment, in which we would be giving battery pack as a product to the OEMs, and all other factors as a business models would be coming into play once we have volumes. So this is how we started back in December 2020, and so yeah, we were smart enough to get lots of grants initially to survive, to utilize those funding in terms of product development. So we raised 40 lakhs, close to 40 lakhs as grants, and we have 80 lakhs as OCPS from AIC Sangam and IMK, and we are planning to raise close to 3 crores for as a pre-seed funding. So that would be utilized to get certifications, start a batch production of close to 500 to 700 battery packs a month, and that would be generating close to 2 to 2.5 crores revenue. So this is about the fund utilization. And so we have only 3 different co-founders on cap table, and 10% as a ESOP. So this is our team. Our team consists of 9 different people and 2 mentors. So we are a team of 9 full-time people, of which myself, I am Darshan Mer, I take care of business development. Saurabh Gowli takes care of hardware development, and Chandrasekhar is responsible for simulations and software development. So that's all about Adiabatic and the thing which we do. Thank you. By this, I'm open to any questions. So currently we are targeting 2-wheeler and 3-wheeler category, that's all. The only reason for that is the technology which we have developed has to be integrated with active cooling again once we need to implement that in 4-wheeler. So gradually we have plans to move into 4-wheeler, but the point of entry in 2-wheeler and 3-wheeler category right now is way too easier than 4-wheeler category. And talking about the OEMs as well, we have so we have Hero MotoCorp with whom we are doing we are yet to do pilot. We are not started the pilot in Gurgaon itself, but few other companies based out of Gurgaon, Noida, we are doing pilot with them as well. So our go-to market strategy would be somewhere close to targeting startups at the beginning, because that point of entry is way too easy, and the technology which we have, once we get a good enough traction, let's say of 400-500 battery packs, I would be able to convince larger OEMs once I have the entire supply chain sorted at my facility. So that's our go-to market strategy. So currently we have 100 battery packs a month facility. That's nothing, to be honest, if we compare the volumes, the demand volumes which we have right now in our hand. So we want to increase that facility to 500 to 700 battery packs a month. It's based out of Hyderabad. Yes. So our entire facility and team sits in Hyderabad. We just got fundings from across India, but we entirely operate from Hyderabad. So, and most of, yeah.
Simple question. You mentioned lithium.
Yes, sir.
This has been around for some time. Do you see anything else coming which is more effective?
Yes, there are lots of different energy storage system factors, sir. Each and everything has its own pros and cons. I'll just give you an example of flow batteries. So what happens in case of grid energy storage systems is, you don't care about the space optimization or weight optimization. In that case, lithium is one of the predominantly used material as a battery energy storage system or grid energy storage system. But there are few other forms of battery packs which are coming out in the market, such as flow battery packs. But the energy density of those battery packs is way too less. It's kind of 1/5 of the lithium as a battery. So yes, there are various kind of form factors of energy storage. But what we bet on is on the lithium ion as a battery pack. Parallelly, we are working on we are exploring few other energy storage systems as well. We would be definitely staying in touch with the trend. So yeah.
Is your BMS agile? It can be used for commercial vehicles.
Yeah. Yes. So our BMS is something which is agnostic with the chemistry, with the number of cells in series. So what happens usually is there are two kind of BMS or hardwares. So one which doesn't has intelligence or which doesn't has any over there update wala thing. And there is another category which can be controlled with MCU and which has firmware in such a way that it can self-learn over the period of time. So what we actually have is a sweet spot in between these two, in which we have added one more thing, which is kind of prediction of 150 different battery parameters at given point of time. So with let's say 5 minutes of battery charging or discharging, or any battery on, I can give out list down close to 150 different battery parameters, which includes various safety parameters, various operating parameters of the battery pack, and various futuristic data, such as based on the let's say previous data set which I have, such as if I see if I recognize a pattern in which, let's say, the temperature is increasing at a higher rate than the nominal behavior, I would give alert to the user based on how the OEM has system integrated. So all the things would be sorted.
By when your pilot will be over with Hero?
So I'm not sure about Hero, but with like 7 different OEMs, I'm in the phase of completing the pilot. So probably by next week it would be done. We started pilot in before going into the manufacturing. So in December we started our pilot with them. As you don't see a degradation of battery pack within a month or let's say 15 days. That's the reason the pilot is taking like 2 months time frame, just to have a significant difference in performances. So yeah.
So are you looking at contemplating to go into the solar panel market also?
Yes. So what we actually, I didn't mention about that thing. So what happens is in solar, as I mentioned, the energy density or the space wala thing and weight wala thing is not necessary. Anyhow, you are going to have a larger space, and of that, some of the space would be utilized for solar battery packs and everything. So what we have is based on the IoT platform of BMS which we have, we can easily segregate each and every battery packs based on their life. So what happens is my first application would be in the automotive grade. After that, once the battery pack reaches 80% health, so basically what is the benchmark is somewhere close to 75-80% of the initial capacity of the battery pack. Those battery packs are discarded. It's same as how the lead acid battery packs are recycled. So in lithium's case, what we do is we segregate those battery packs based on their health, and those battery packs or cells would be utilized in the solar or lesser energy density application. And once that application is done, the battery packs would be sent to the recycler, in which the materials of the battery packs would be segregated and the recycling would be done and again infused into the ecosystem. So that's the broader view, but I can't do it alone. So that's why I have a recycling partner placed in Hyderabad. I have giving like the solar partner placed, who comes to me and tells me that I have this so and so requirement. Based on the segregation, I provide them the battery packs. So, and the cost of those battery packs is kind of 60% of the automotive grade battery packs. So those battery packs are cheap, but those battery packs are bulky. So like you need a larger space and a larger weight for those things. So yeah. Any more questions? Yeah. Yes. So we have done the entire cost analysis of the product as well as the form factor and everything. So our battery packs are 10% higher in terms of let's say selling price. So our selling price is close to 18 to 20 rupees per watt hour. So that is close to 18,000 rupees per kilowatt hour per unit of battery pack. Whereas the industry standard is close to 16.5 to 17,000 per kilowatt hour at volumes. And the USP which I'm giving them is kind of a reliability, a surety, and the major thing is life increment of the battery packs. So all those things are can be mitigated. Yes, the scale. Yeah. So the scale which I'm talking about is a 1,000 kilowatt hour or a megawatt hour size. That is 1,000 battery packs of a kilowatt hour. And usually a two-wheeler has somewhere close to 1.5 to 1.8 or in larger performance cases 3.6 kilowatt hour battery packs. So I need to achieve 500 to 700 battery packs to be in that scale, like 18 to 19,000 price. Currently I am getting a price at somewhere close to 21,000 rupees costing. So the end costing. And it is costing me somewhere close to 15,000. So that doesn't include the the profit and everything. So still now I'm in profits, but I don't have a price competitiveness in market right now.
We can close the floor for questions now. I think we've elapsed the 10 minutes.
Maybe we can talk after this thing. Yeah. So I'll just wrap up the thing. So yeah. Yes. No. It will cost me close to 12,000 in that case. Yes. So currently I'm not. Yeah, I'll share those things. Yeah. So thank you.
All right, great. Can we have a big round of applause for Darshan? I think. Awesome. So as next part of this presentation, we'd like to gauge investor interest for Darshan and Adiabatic. Investors who are interested in considering the opportunity of investing in Adiabatic, can you please raise your placards? Do we have any investor interest for Adiabatic for investing in the company? Okay, no, we don't. Investors would like to discuss things better and have follow-up questions. Can you please raise your placards? Okay, I think there are a lot of questions that still need answers. So I think, Darshan, you have a few conversations to do. So you might want to do them and they might convert to interest later on, right? Great. Thank you so much, Darshan, for a brilliant presentation. Next up, we have with us Harsh Khaitan, who is the founder of a company called QuickPick, which is in the AI space. QuickPick is an AI-powered photo sharing app for all occasions. The new age digital album, which automatically finds and manages your photos from different important occasions of your life, from family trips to house parties to music concerts and weddings. They've got it all covered. We'd like to welcome Harsh on stage, founder of QuickPick. Can we have a big round of applause for Harsh, please?
Hello, everyone. I'm Harsh, founder of QuickPick. We are building a photo sharing platform that is powered by 7 AI models. We are backed by 5 angel investors, including Amit Ji, who's here, Jito team, Dabu Ratnani, who is a celebrity photographer, is our brand ambassador and partner. And Dr. Prateek Narang, who is the faculty of machine learning at BITS Pilani, He is our mentor and advisor in all our machine learning efforts. So talking about the problems, QuickPick has two target groups. The B2C target groups, which involves 2 billion people across the world. How many of you have ever attended a wedding or a business conference or a family trip or a music concert and not received your beautiful pictures from that event? Even if you did, they got lost in your phone gallery and you could not find it 1 or 2 years later. Well, with QuickPick, you can find your pictures from every event, small or big, in just one tap instantly using proximity detection, geotagging, and face recognition. And also, you will be able to locate the pictures easily in future. Some of the other problems that this target group faces is quality loss on messaging apps, because 80% of the photos today are shared via messaging apps. And lastly, for the millennials, we have a hard time in deciding which is the best picture to post on our social media, which is the best caption and the best filter. Coming to the B2B target segment, which includes photographers, event managers, MICE, and Horeca. These people have to spend a lot of time in filtering and editing the pictures. They are unable to monetize their clients properly. They have challenges in customer acquisition, in increasing their brand recall and awareness. For these B2B audience clients, QuickPick is a one-stop solution to increase your customer delight, your brand presence, audience reach, make your client acquisition easier, client monetization easier. By using QuickPick, photographers can instantly filter and edit the photos, reduce their lead time for delivery from 7 days or weeks to just a day. They can instantly deliver photos to every attendee using AI models, proximity, and geotagging. They can send push notifications, emails, and WhatsApps to remain connected with the attendees and easily acquire their next 1,000 clients, and many more features. So moving forward, we launched QuickPick 5 months ago. And in the last 5 months, we have been able to onboard more than 1,000 photographers. We have more than 120,000 users using QuickPick today, with a daily average user count of 10,000 and monthly active user count of 1 lakh. There are more than 30 million photos uploaded on QuickPick every month. We have garnered more than 100 million impressions, scanned more than 30 million faces, and delivered more than 6 million photos to the people who it actually belongs to, and didn't let them rot somewhere in a hard disk. So, talking about so in future, QuickPick will also help you in finding your best pictures from a pool of 1,000 pictures, and it will also automatically suggest you the best captions and filters for Instagram to get the maximum reach. QuickPick is going to reward every user for every picture uploaded. And this will help us in monetization, which I'll cover in the monetization part. Talking about our 7 proprietary AI models, face recognition and image optimization are already deployed. Quality detection, image enhancement are currently under training. And in the future, we will be building the social AI and brand profiling. While our AI models are 99.9% accurate, they are blazing fast, which brings me to our USPs. Number one is a very low operation cost. So for a user who uploads 10,000 photos on QuickPic, it costs us less than 100 rupees to store those 10,000 photos for a year, run all the processing, machine learning, face recognition, deliver it to everyone for an entire year, less than 100 rupees. The second is a very low customer acquisition cost. And the third is a high stickiness and retention ratio of more than 80%. So just looking at our core monetizing strategy of subscriptions, the market size is at least $7 billion. If we include the other monetization strategies, it would roughly be a $30 billion market. So talking about monetization, in the last 5 months, we have roughly generated more than 10 lakhs. We are currently at a monthly revenue recurring of INR 3 to 4 lakhs. And this is just through subscriptions, 80% from B2B and 20% from B2C. Pricing for a B2B user can range from 1,000 rupees a year and can go up till 50,000 rupees a year, depending on what do they want. And for a user like all of us, it starts as less as 200 rupees per year, which is 75% cheaper than an iCloud or a Google Drive. Some of the other monetizing strategies are targeted ads. So what I mean by targeted ads is we have a brand profiling engine which can let me know which users wear Nike products. So in future, whenever Adidas or Puma wants to launch a new collection, we can target the people who wear Nike very often or who wear Puma very often. And these will not be ads. These will be interactive ad campaigns on the QuickPic app, not banners like Google Ads. Third is behavioral AI. So because everything is proprietary that we are building, we can always use big data, license our AI models. One of the top things currently is behavioral AI, where the algo automatically learns your preferences. So it would know what is Harsh's liking, which pictures would he like best, and what is your liking, which pictures would you like best, automatically tag those pictures based on our preferences. This is something that we are currently working on and will be live in the next 4 months, which is a marketplace for photographers. So if we think about tourist spots like Taj Mahal or a music concert like Sunburn, freelance photographers can actually sell pictures via QuickPic. QuickPic simply becomes an interface and we charge a transaction fee. And this has a very big market already established in US. India there's nothing like this existing as of today, but this itself could be potentially a $10 billion annual market. And lastly, we could sell digital devices in sync with our app for gifting. So that's all from my side. Open to any questions. Thank you, everyone. One more thing, so sorry. We are looking to raise about 4 crores. Our previous round was 75 lakhs at a valuation of 10 crore. Currently, we are looking to raise 4 crores. This will be used 50% for marketing, 30% for product development and human resource, 20% for operations and server costs. This 4 crores should help us get a runway till June of 2024. We aim to reach 3 million users and 30,000 photographers and an annual revenue of INR 4 crores by June of 2024 with this funds. Thank you. So if you look at gross, so yeah, operational profit, yes.
You also mentioned that in the initial slides that you will provide what the first slides where you said geotagging and
Yeah.
easy kind of thing. That is, Google Photos does the same thing today. So if I tag it, I just search. I say, hey, XYZ, XYZ. It does geotagging. I can change. I can edit.
Right.
I have the options to geotag or not tag also.
Correct.
So it doesn't come automatically
Correct.
also.
Correct.
So besides that, so can I say or presume that over and above that is what you built is an interface for the users to kind of, it's just like you create this random search kind of thing, which I can do. Is
Okay,
that
so
what you created?
I'd like to answer your question. It's basically the difference between Google Photos and QuickPic, if I may. Called clustering, which is a push mechanism. So if you have 10,000 photos, Google Photos will take at least 1 hour. That is number one. Its accuracy will be much lesser. And overall, it could actually have duplicate faces as well. It might skip some faces. What QuickPic does is actually what is called face recognition, where you give us the data, which is your face of a particular standard, and within 1 second, less than 1,000 milliseconds, whether the album has 10,000 photos or 1 lakh photos, we would show you your pictures from that album. So that is difference number one. Secondly, you would actually have to tag 100 people in this room with their email IDs to send them a notification. On QuickPic, what happens is if you have those people in your contact list or their devices are beside your device, or you have set a location for that album and those people are near that location, it automatically sends them a notification to join that album. So basically, your manual intervention to deliver photos is zero. Everyone gets their own pictures automatically.
So when you say if we click pictures out here of the entire room out here, and we use QuickPic, all of us will get.
So there are 3 steps. So first is that that person has to be a registered user on QuickPic. If they are not, then it's simply a QR code or a link which they need to scan, click a selfie, their account is created, which is a one-time process. So in future, whenever you upload photos, they would get notified automatically.
We have to go through the QR scanning first every time.
The first time.
No, just take an example, like you said, if they are there in my contacts.
Yeah.
So let's take whoever out here, Mr. Ojasvi probably.
Right.
Everybody is in his contacts.
Right.
So Mr. Ojasvi has this whole, he's a registered user and he uses QuickPic, he takes his pictures, uploads it on it.
Right.
And then it will reach out to us automatically.
So you need to be a registered QuickPic user.
I also have to do
this. So there are some privacy concerns, obviously. So you need to be a registered user. You need to be in someone's contact list or near that location. If those 2 conditions do not meet, you can simply scan the QR code or tap the link. That's all you have to do, nothing more. And you instantly get your pictures.
Okay.
I hope I answered your question, or was there?
I have one more question since you're asking.
Okay.
You're inviting me, so I'll ask. So who are your competitors out here? And at what scale are they?
What scale are they? Okay. So if you look at the B2C market, the main competitors are WhatsApp and Google Photos. If you look at the B2B market, we have Voldo in America. And in India, currently, we have 2 up-and-coming players called Premagic and Algomage. But these B2B competitors solely focus on B2B SaaS. Like, they do not have any option for you as a normal user to simply sign up on the platform and share pictures with your friends or family. That option does not exist. So they solely cater to the B2B audience, whereas QuickPic is a community for photo sharing, which has a separate product for B2B and a separate interface, the mobile app for the B2C audience. Yeah. And the scale is, so all of these competitors are roughly doing, I would say, 1 crore annualized revenue. They, like, AlgoMage or PreMagic, as far as I am aware. And in terms of the number of photos that we are processing or the number of photographers on our platform, we are almost on the same level, all of us. Yeah.
So you will say your competitors or the largest in the...
We are not the largest currently. If you...
So,
Please, so sorry.
So when I say largest in the industry, it's like how much room do you have here to scale up? If you
To
were to compare
scale
this
up,
today's-
okay. So in India, just in India, we have more than 5 lakh photographers. And if you look at an average billing of 10,000 per year, which is the standard that we do at QuickPick, it's roughly a 500 crore market just in India, just for the photo sharing app. Then if you include the white label product where a QuickPick makes a website and a face recognition app for the photographer himself, that costs 40,000 additionally. We charge separately for the filtering and editing part as well. So if you look at the value-added services, the billing can go up till 50,000. But at the lowest, it is a 500 crore market in India. And worldwide, it would probably... So worldwide, there are 3 million photographers. So it would be a $1 billion market, roughly, worldwide. Just the B2B SaaS part.
Thanks.
Great. So we're done with the time. So we'll close the floor for questions. You can take more questions offline as well.
Sure. Thank you and have a nice day, everyone.
Great. Can we have a big round of applause for QuickPick, please? So now we will open the floor for investor interest in QuickPick, which is Harsh's company. Investors who would be interested in considering the investment in QuickPick, can you please raise your placards? Do we have any investor interest for QuickPick? Nope, we don't have any investor interest so far. Investors who would like to ask follow-up questions and would like to take conversation offline can raise their placards. Okay, so we have 3, 4, 5. So we have 5 investors who would like to take more questions. Harsh can take those conversations forward offline. Just reiterating, please make sure you write that in the folder that's been allotted to you as well. So it's documented as well, so that Avid Technology Incubator can take the conversations forward offline as well. All right, so next up we have with us Arino. Arino is a startup in the AI and healthcare space. Arino is a virtual AI-powered arena that motivates fitness users through gamification and rewards. On Arino app, users can win cash vouchers for fitness challenges and working out regularly in front of the mobile camera without the need of wearable devices. We have with us founders of Arino with us, Siddharth Jain and Nikhil Chhabra. Can we have a big round of applause for Siddharth and Nikhil Chhabra, please?
Not this one. Not this one. That's not me. Number 13. 13. Good afternoon. I know it's been a long day today for all of you. We'll make it a little more interesting because this idea itself related to fitness, we want people to be motivated, and I'm here going to motivate you guys.
Right now, there are a few minor technical issues due to which we'll have to defer Arino's pitch in some time from now. Meanwhile, as we solve the technical issue, we would like to call on stage the next founder, which is Lark AI. Lark AI is a startup in the AI and IoT space. It's an innovative IoT-based smart, portable, and affordable heart health screening device. The founders of Lark AI are Abhilash Chakravarti and Preetam Dhalla. Do we have them on stage? Great. Abhilash, right? Can we have a big round of applause for Abhilash, please?
Thanks. Good evening, everyone. Good evening once again. So I'm Abhilash from Lark AI. Now, we didn't name our company Lark AI just like that. Lark is a songbird, which indicates joyfulness and cheerfulness. So that's what we have planned to do with our product. For the first time, we've introduced a window to your heart. Let me show it this way. So this is an indicator of how good your heart is. And that's what Lark does. Some challenge with the I have some problem with this. Yeah. Okay, there we go. So all of us know of somebody who has been affected with a cardiac arrest. Most of us do not know that we are cardiac patients unless we actually come across the symptom. That's precisely the problem which we are solving. When we look into the large problem, which is facing in India, is the fact that the large number of people, 700,000 doctors and physicians, but very few cardiologists. And most of the devices which you see, which is used for this ECG, are concentrated in large hospitals or diagnostic centers, which are unaffordable and inaccessible to large many people. So what we've introduced for the first time is a portable smart ECG device, which is a combination of an ECG plus a phonocardiogram. So it does whatever ECG does in a traditional sense, plus a preclinical echocardiography. The combination of this device is patented, and we've been supported by a lot of government grants so far. We are here in this pitch for asking for about 1.5 crore rupees, and we already have a commitment of 50% from Amitji's real-time angel funds. In this forum, we are looking to... The reason why we believe this is such a big thing is that this is a large addressable market, about $1.7 billion, growing for about 7% CAGR. Nobody has resolved this issue as we have. For the first time, what you see is a ECG, which is portable, also at the same time, something which is smart. Now, combination of this is also beneficial because it's very affordable. Whereas a ECG in a large hospital would cost you about 1 lakh rupees to buy and about 300 rupees for you to go yourself and scan. This device costs only 25,000 to the end doctor. Made in India by our own facility, and it's a patented product. The beauty of this is that it has an AI/ML running on it. So it is completely smartphone independent. It does not require connectivity. And all it does is it captures the lead from your thumbs, and the AI/ML runs on the device. It detects patterns in your ECG and PCG graphs and indicates what is your heart condition right now. So it detects arrhythmia and heart murmurs, and that is a good indicator of what is the condition of a heart now. We also take a predictive stress and see that looking at the large number of tests which we've done, how is the product, how is your age group and your test data validating ours? We give you an indication of your heart condition in the future also. So that's something which we are able to do with our device. Let me tell you who are our customers right now. So as I was mentioning, the first customers who have purchased this is general physicians who are buying for their own clinics. Then we have a large B2B customer, which is HealthCard, which is buying for doing diagnostic tests at home. So even today, for example, when you ask for a complete heart check or complete health check, the only way you can do it is by using a biochemistry or a blood test. Whereas the gold standard is really the when nobody comes to your home and does an ECG. So this is a capability which we have added to them so that they can do an ECG in the home. In addition to that, we also have a algorithm which is device agnostic. Now, this means that any ECG or PCG data which you give us on the health cloud, that we can run an algorithm on it and tell you if there's any cardiac arrhythmia or there's any heart murmur or not. So that's the big digital piece which we are building. The current monetized streams are the physicians and the B2B customers. Later on, we'll go to the large hospitals also. So this is where we are. So we are looking at closing this year at a revenue of about 80 lakh rupees. This is the first 9 months of operation of the company. And we've installed about 42 units in 42 different general physicians' office and about 200 units to one large B2B customer. So we're looking at a follow-on order for the same customer of about 5 crore rupees in the next financial year. But we'll close this year at about 80 lakh rupees. Now, before we even came and started commercializing, there was about 2 years of research which went into this product. More than 17,000 patients were screened in 3 different hospitals, in 3 different locations, to understand what is our accuracy and will people buy. We published 2 papers and we put the documents for submission to CDSO, which is the Indian FDA, and they gave us the approval in April of 22 last year. So even though the company was formed on 1st January 2020, for the first 23 months, we just did the research and got the algorithm perfected. We got the product feedback, and we could then claim an accuracy of 99%. So that's basically how the product is approved for sale right now. Over a period of time, we'll be adding more features. So the good thing is this hardware which you saw is scalable. We can keep on adding modalities here, and that basically makes you a complete heart and lung device. But also we are looking at international expansion. Along with this, we have already interests from Africa and UAE, wherein the product is approved or can be sold right away. In India, we already have the regulatory approval, and we are looking at getting the CE approval as we go along. So this is where we are on the expansion side. Why we are here is basically to cover for the 50% of our ask. And we are supported by Startup Odisha. So we are incubated out of OHub, which is in Bhubaneswar. Mighty Samrit Grant, and of course BIRAC. So these are the people who have so far invested in us. And what we are looking is about, we're looking at about 15 crore valuation now. And for that, we are looking to offload about 10% equity through CCPS. So that's basically what our ask is. So I and Pritam are the 2 founders. Antenna Ventures wrote the first check to us in December 21, 6 months before the product was approved. But this is how you can reach me. There's Abhilash at larkai.in. I'll just take a moment of yours to go through the YouTube video, which is basically tells us how to use the product. Then the clinical validation and so on. An important aspect of how we differentiate ourselves from our competition is the fact that our device is not dependent on any smartphone. So it's an independent device by itself, and it gives you a clinical grade analysis on the comfort of your practice. So if you're a doctor, or if you're in a gym or in your office, you can do a quick ECG on the spot, and without requiring any kind of connectivity or any kind of a smartphone for it. So that's the USP of this product.
1 minute left.
Yeah, and with that, the another advantage what we have is a phonocardiogram inbuilt into it, which tells you how your heart walls are opening and closing. So whereas your ECG tells you your heart rhythm, the heart murmurs can be detected using a phonocardiogram. So we have a complete view of your heart, and that's why we call this product as a window to your heart. Okay, so now I'm open for questions. I'm looking forward to your queries. Wait, sir.
How many path labs have you tied up with so far?
So we've tied out in
the home test kind of thing.
before launch.
till date?
So we tried out in 3 different hospitals, 17,000 patients.
Are these white labeled or product which you sell them?
No, so this is our own product
This is
made
your
as per
product.
our own
So-
specifications.
And how's the after service out there?
So we give a 3-year warranty and we do a complete
Where are the
replacement.
service centers? How many service centers do you have?
So we don't have a service centers, we do bench repairs. We take it back and then we basically service it at the factory.
How many have come back?
So out of the 42, we've got so far only 1 which has come back. Most of the things can be, are basically cosmetic or enhancement requests. These are primarily related to printing, that the printing needs to be a little faster. Then we hear a lot of information that the cord has to be made a little more robust. But apart from that, none of them have come up because of quality issues. Because we make it in a ISO 13845 factory in Bangalore. So the quality is checked by us before we sell.
Do you also get the paper out there, the printing paper?
But
Do you also supply printing paper with that? For the ECG?
Yes.
The printer, do you also provide the paper
Yes.
with that?
So we provide as part of the standard accessory. You can take the printout or you can send it on the cloud. So if you send it on the cloud, we can analyze and interpret and give you the result over email, or you can log into a cloud using your login credentials. But most of the patients or customers whom we've seen, they want a physical ECG report. That is something which is very prevalent or a strong customer preference.
Where is the manufacturing? My question was, yeah, but it's okay.
Yeah, so it's part of the standard package.
So do you also provide paper along with that?
Yeah, it's a standard thermal paper, which is off the shelf available
Where is the manufacturing facility?
in Bangalore, in India.
So I have a question. So how it is different from the Apple Watch?
Yeah, so great. So Apple Watch only tells you an ECG. We can also tell you how the heart valves inside are opening, for which we use a PCG or phonocardiogram. So an Apple Watch, which is 8 upwards, will cost about 45,000 rupees. This costs 25,000 to the doctor. There's another
The
difference.
price is the only difference.
Price is a big advantage. Also, we have phonocardiogram, which Apple Watch does not have. Phonocardiogram is required for checking your heart murmurs, whether the walls inside are opening and closing properly.
It checks the arrhythmia also.
It checks for ECG. So the
No,
basis,
arrhythmia also. Rhythm also.
Yeah.
AF also it checks.
yes. So those are ECG
That checks
parameters.
for the AF only. It cannot tell that which valve is wrong or which valve is not operating. It only will tell about the irregular rhythm.
Yes. Yes.
So what is your USP? What would be your USP against?
So our USP is that this is a doctor's device. It's a professional device. Runs on a 6 to 8 hour battery. So you can do good 200 patients in a day. It runs on electricity as well. So it's a device which you use for others testing. Then the printout which we give is a gold standard which you can start the printout or treatment with. So I'm not sure you can do it with any watch.
So B2B will be your segment basically, not B2C.
Yeah, so we sell it to B2B primarily, but eventually at the end of the day, there's a patient connected to a device. So we sell it to doctors who use it for patients. Then we sell it to diagnostic service providers who take ECG at the comfort of the patient's home. So in that sense.
So it will not be a replacement for ECO.
So it will not be a replacement ECO because ECO has got many more parameters. It requires ultrasound and at a particular frequency, and it takes you a lot more calculations. So it gives you a preclinical of the ECO. It cannot replace ECO.
So it will have only one part of the heart health, not the complete heart health.
Yeah. So as you saw, we are also building on the capability of our device. So this is currently what we are approved for. We are also doing a 12-lead ECG. So this device or this hardware can also be upgraded into a 12-lead ECG. And once we have that approval, we will be able to say with high confidence, we can replace any ECG machine. ECG machines typically sell for about 1 lakh rupees in hospitals. We are selling it at a fraction of a price. IoT enabled AIML on the device. And that's really a big differentiator, made in India.
You mentioned it's
You made
clinical.
a statement that KK would have been alive if this device
so-
would have been there.
Yeah.
How true it is?
So if you remember when he started feeling discomfort, it was at the end of a concert. At that point, if he had used our device, it would have immediately given him the heart condition at that point. He went home, he took digestive pills and fell asleep. And by the time the condition became worse and he passed away. So we give you a point of care, accurate heart check, which prevents a sudden cardiac arrest from happening.
In the interest of time, can we take more follow-up questions offline? Because we have 2 more presentations and we'd like to make sure.
One more question.
Yeah.
Yeah, so at a 200 level, we had a cost to manufacture about 17,000, but we tied up with a Japanese company called Murata, and they've helped us in bring the cost of manufacturing down to 12,000 per unit landed cost.
Just one observation. There's a company called Sanket Life, which has been selling this device for 5 years. They've came up with different variants, and then today I think the pricing is about 3,000 rupees for a customer. How do you compare yourself with them, and how do you plan to actually make an impact in the market? At the end of the day, this patient is going to be using it, whether through the doctor or whether direct. So how are we going to really compete?
Yeah, so till today, nobody has put in an ECG and a phonocardiogram in one device as we have done. Sanket Life is only a non-screen based ECG. So you need a dependency of a smartphone and connectivity to do any kind of analysis, interpretation, or reporting. Smartphones generally do not last for 2 to 3 hours of continuous use. Our device can run on electricity. It runs on a battery, which lasts for 6 to 8 hours. So it's a professional medical device, which you can keep in the doctor's place throughout the day. It works when you really need it. Sanket Life helps in making the awareness, but it's not a professional grade product. It's something which you can do for screening, for remote checks, for your own personal health. But to earn money out of it, you need to show a patient that there's a device which I'm using, which gives you a paper at the end of the test, and that can be used for starting testing.
Great. Thank you so much. Thank you so much,
Thank you, sir.
Abhilash. Thank you so much. All right. As next steps, we'd like to hear from the investors. Investors who are interested in exploring the investment opportunity with Lark AI further, can you please raise your placards? So we have one investor interest so far. Investors would like to ask follow-up questions and get to know the company more. Can you please raise your placards? Okay, so we have 4 investors who would like to know the opportunity more. So yeah, all right, great. Now we can go back to the previous startup, which we were kind of about to kind of get things started on. So I'd like to call on stage founder of Arino, Mr. Siddharth Jain. Can we have a big round of applause for Siddharth, please? We just have 2 presentations. Can we be louder with that round of applause, please? Yeah, great. Thank you.
Thank you. I'm back, and hopefully my presentation as well. So good afternoon. So I would like to begin starting one question. That do you guys aware that you can now actually get paid for doing workouts? Yes, that's true. And here we are with Arino, AI-powered gamified arena for fitness challenges. So let me first introduce the team behind it. Myself, Siddharth Jain, I'm the co-founder. I'm a product manager. Was working with BlackRock for last 9 years as vice president. Decided to move out of my well-paying desk job and started my own startup. Because I've been a fitness enthusiast. I've been into fitness for the last 20 years. I've been asking my friends, family to get into fitness, do something about yourself, spend at least 5 minutes a day. But we know, it comes the list of to-dos. It's one of the last thing that people would want to do in a fitness kind of thing. My co-founder, Nikhil, so he's a serial entrepreneur. He has done a startup before with the name Rent on Go. He has 18 plus years of experience in technology, marketing, product management. We have our advisor, Anirudh Kaul, so he's a deep tech guru in Silicon Valley. So he's associated with big names like NASA, Microsoft, Pinterest. So, and he's the author of AI book. So he's the brains behind how we are going to manage the tech for Arino. So let me start with the problem statement that why we, So the challenge with the fitness is, as I said, is lack of motivation. Now that motivation is a very broad topic, but that can happen due to multiple reasons. First of all, there is insufficient time. The most common excuse is time nahi hai. Second, we see, incentives are missing. So fitness is something which is a long journey. It takes time to show results. People are expecting quick results or, some very, in a very short time, but that's not going to happen. The other solutions which are there in market, especially the app-based solutions, they're expensive. They have a subscription for which you'll have to spend roughly around 2,500 to 3,000 rupees per month, per year. Also, we feel fitness is boring. People do workouts, But at times they feel, okay, we have been doing this workout, now what? We have to do something different. And that's why people, move to different skills, start playing sports and many other forms of fitness. So considering that in mind, we have created Arena. So it's first of a kind affordable solution which rewards people for being fit. So there are two ways where you can earn money from Arena, but how we do that? So first, it's not a virtual training app like any other fitness app in market. We don't teach you how to do workouts. We expect basic level of fitness, and we understand people are aware of basic form of fitnesses. It's a gamified platform for fitness. We understand fitness can be boring, so that's why we have given it a form of gamification so that people are associated with it in a form of fun. They feel they are doing something for fun, but at the same time, they are getting fit as well. So that's a big hook for a youth, especially in our country. Then it's completely human touch free. It's AI ML based. We have created algorithms that measure your workout with more than 90% accuracy. And that's what we are very proud of. We are not saying that you have to spend hours and hours on a platform like running, walking, Strava and all. You have to walk like 10,000 steps. 10,000 steps would mean roughly around 2.5 hours in a day. We're not saying you have to spend that much time. Spend like 5 minutes on a platform, take part in 1 minute challenges, and you will be able to start a good, healthy habit for yourself. Okay. So as I said, we are paying people for doing workouts, but there should be some way where we are also making money out of it, right? So we have one revenue model, which is already there launched. So as soon as people join our platform, they get some registration points at start. Using those points, they can work out regularly and they can start earning more points on a slow basis. That's free and slow. So once you gain more points, then you can redeem them for cash vouchers, or you can even give it to charity of your choice. The second way, which is more fun way, is to participate in gamified challenges. So there are weekly challenges going on for few workouts like push-up, planks, high knees, and squats. Very basic form of workouts. You participate in those competitions. You put in some points that you have got at registration. You create a pool, then we distribute that pool on a 80-20 basis. We distribute 80% of the pool and keep 20% for ourselves. So every challenge we are making 20% as a profit. And then again, the same thing, a person who has given like 50 points for registration is capable of winning like 5,000 points. And that they can redeem for cash vouchers and charity again. The new additional models that we are working on is the subscriptions. So every fitness app will have a subscription. And so we are very low in the industry, as low as 1 rupee per day per user. And that's the beauty of this model. This lowest subscription can not be given by any fitness app. At the same time, they are giving you that money back. So that's the beauty of it. And additionally, we have in-app purchases where people will be allowed to buy certain points, which they can use for unlocking features into our app. So we have been live on Play Store. The iOS app is still being worked upon. It should be there live in 2 to 3 weeks. The 4 workouts, which I mentioned, push-up, planks, squats, and high knees, they're already there with more than 90% accuracy. We have 3,000 downloads, out of which 23 are registered users. 2 points I want to mention about what we have achieved in the last 4 months is people have recorded 10,000 plus attempts on Arena platform. They have worked out 10,000 times. And we are seeing this number growing month on month with more than 100% growth rate. So where are we with respect to the competitors? So we understand there are different competition in market, but we are clearly, as we are not virtual trainers, we are a competition-led, workout-based, cash rewarding, AI-based. We do not require any wearable devices. We are not going to show you videos that tell you how to do a workout, and we don't ask you to follow those videos as well. That model is boring. Nobody does that. And nobody cares if you are following that video or not. So AI ML is going to measure if you're going to do a workout properly or not. If you're not doing it properly, it will not measure it. If you're cheating, it will tell you that you're not doing it fairly. So it's a very competitive model that has been created with more than 90% accuracy. Our go-to-market, we are trying to keep the CAC as low as possible. So what we are doing, we're trying to reach out to B2B and B2C customers. So we have tie-ups with co-living spaces, Zolo, Stanza. So there, where the youth segment is there, 18 to 25 years, which is the sweet spot we are looking at. So there we are doing a barter system that we are giving you this platform for free, but we need these users onto our platform. So that's a cheap way of getting customers in bulk and making them hooked onto the platform. We understand getting customers is one thing, but retaining them is a big challenge, especially in a fitness industry. So what we are doing, we are creating Kinect-like fitness games onto our platform. So consider you are playing a Pac-Man, you're jumping up, the character moves up. You did a squat, the character moves down. So you're playing a game, but at the same time, you're getting fit as well by doing some fitness workouts. So that way, we are going to hook a lot of youth, lot of audience onto our
7
platform.
minutes done for the presentation.
Sure. Other ways are subscription-based personalizations that we are going to create for users. At the same time, we are going to create a lot of gamification features as well. In terms of recognition, we have been recognized by Ministry of Ayush, and we got a chance to represent Areno. We showcase our demo in front of PM Narendra Modi at the International Day of Yoga, as they feel this concept can actually be used for yoga as well in future. We are also part of Telangana AI mission. We are part of their cohort 3. In terms of a roadmap, we are planning to complete our iOS app by this quarter. We are planning to add more revenue streams and add more workouts as we proceed. As soon as we are done with this, we are going to add more skills to our platform like dance and yoga. That can be the next skills that we can look to add. We are also planning to go global with this application. So right now it's only in India, but we want to take this application global and we want to reach 1 million paid users globally in 4 years with an ARR of 50 CR. So our ask for this round is $100K, which is 80 lakhs rupees, out of which we have already received commitments for 27.5K, and we are looking to bridge this gap through this initiative. The fund primarily will be used for the product and its features. So this is me performing workout. This will just actually show you how the workout is measured. I don't know how to play this here. So this will tell you how actually the workout is being done and how accurately the workout is measured through Areno. So we have added more features. So this is a very raw slide that's being played. Yeah, thank you. Open for questions.
Investors who are looking to ask questions, feel free to raise your hands and ask any questions. If we don't have questions, we can move on to the next slide.
Can you hear me? Made a statement that when you cheat, the app will tell you that you're cheating. What do you mean by that? When you cheat, the app will tell you that you're cheating. What is that?
Yeah, so basically we have built those algorithms that tells you if you're not doing a workout correctly. So let's say talk about squats. If you're not doing a full squat, if you're not going down properly, you're doing a half squats, it will tell you that you have not done the squats completely. If let's say a person is switched in between a workout or you're using a TV as input, it will detect it and say it's not a live person or the person who was doing has changed. So all those kind of checks we have built so that we can actually use it for many different purposes in future. So those purposes could be insurance, those purposes could be corporate challenges, those purposes could be even global challenges. So we are even looking to add things like facial recognition, even biometrics that can ensure the person is the same which is actually registered on the platform.
The facial, the body, extra, everything is taken care, right? The entire body structure is captured there, and that's how you say. So when you're doing squats, for example, you're doing squats out here, if you just go halfway down, it'll tell you it's not doing. How accurate is that?
Sorry,
how accurately would it be able to advise the person out here that you should do the squat this way? I mean, how accurate? And does it come in text form also, or it just speaks up? Voice?
So this is, as I said, it's more than 90% accuracy. It will tell you if you've done it correctly or not. And this algorithm is improving as more and more people are doing workouts, right?
But how does it convey in terms of text, or it kind of there's a voice which comes out and says doing good or doing bad.
I'm not hearing you correctly.
How does it convey? Does it come out in terms of text that you're not doing it properly, you need to bend down further, or you need to, or how the AI would tell you in what form?
Because we have written set of rules. It's a customized set of rules that we have added over the AI logic in terms of computer vision. And those rules are being checked with every repetition and making sure that, if one of those rules are failing, then we are highlighting, okay, this rule is failing.
I got that part.
Yeah.
Is this it? How does it communicate?
Okay. So this happens through audio and video, so both. So there will be audio announcements that will tell you where you are going wrong. At the same time, some of the feedback will be shown on the screen as well.
Right.
Yeah. Sorry.
You're charging for the registration?
Right now, it's completely free. We want more and more people to be aware about this platform. But very soon, we are going to launch a subscription, as I mentioned, 1 rupee per day per user.
So when they get the coins at registration,
yeah,
and then they win the coins on winning a challenge,
yes,
what is the value of that coin if you're not charging anything?
So basically, for 1,000 Areno coins, we are giving a value of 100 rupees.
Okay, that's a notional value you are giving.
Yes. And that's something we can control in future as well, depending on how much we are burning. So we can control that number.
Right. I think these are all the questions that we have. Great. Thank you so much. Thank you so much, Siddharth, for your presentation. Can we have a big round of applause for Siddharth, please? All right. So now we'd like to gauge interest for Siddharth's company, Areno. Investors who are interested in investing in Areno and would like to have further conversations can raise their placards. Okay. Right now we have no interest so far. Investors would like to ask follow-up questions and get to know the company more can raise their placards as well. Okay. So we have about 5 people who'd like to follow up further. So yeah, great. Cool. So we can now move on to the last presentation for today. We have with us Last Mile Care at OneCare. This is in the health tech space. Last Mile Care is a healthcare tech startup that is addressing the health equity by providing phygital OneCare units for affordable and accessible care to peri-urban and rural areas. They own the entire patient journey and act as a bridge in the entire continuum of care across secondary and tertiary care. We have with us the founders, Anupam. Okay, so we have Anupam with us, Anupam Biswal, who is the founder of OneCare and will be the last presenter for the day. Can we have a big round of applause for Anupam, please?
Thank you all of you for being patiently waiting and hearing all of us out. So I'll come straight how this as a solution we are looking at. So most of the areas which are not directly in access in the urban areas, if you go into peri-urban, urban and rural areas, they primarily lack the access to proper healthcare facilities. Even the basic facilities that are being provided by the government and also by primary care providers or the private providers are not standardized and or they are not equipped well enough. So this is the gap that we are trying to address by putting up digital clinics, and we have learned this. So as a co-founder, we are a team of 3. So a little bit about myself. I have been part of the development sector for more than 15 years, an ex-army person, and then running this for last couple of years. And I was one of the think tanks who designed the Delhi Mohalla clinics in the initial years and ran the first 3. During those days, we were pretty clear that if we lower the cost of operations, cost of capex, and go a little more deeper, we can address this problem more holistically for the population that needs this most. Along with me have joined Pooja. She's a woman entrepreneur, and Gaurav, who plays the role of CTO. Gaurav comes from IIT Kharagpur. Pooja is a serial entrepreneur, has run multiple businesses herself, and now 3 of us are trying to address this. So in just one line, if you want to say it, we are trying to address the basic primary healthcare needs, creating the hook for secondary and tertiary care by putting up phygital clinics, low-cost phygital clinics, which are physically present there, manned by proper health professionals, digital connected by the doctors, and trying to serve the patients by giving the right kind of consultation, medication, and any kind of diagnostics and insurance. These are the kind of services that we are trying to do. I'll not dig deep into the problem. Problem is quite well established. Number of reports, government themselves come out with number of reports stating the kind of gaps the infrastructure has. The entire G20 mandate in health has also pronounced this very clearly, where they are trying to say that health infrastructure is one of the key problem areas, the problem area that they are trying to address. So we have taken this bait a little earlier. We have already set up 8 such clinics. We are now backed by Gates Foundation in UP. They have given us a roadmap of 100 such clinics in next 2 years. So we are quite energized to put this kind of clinics furthermore in the state of UP. Very conservative figures. Clearly, it has got more potential. It has clearly been established the kind of private clinics that are operating that are not manned by the proper professionals itself is giving a lot of revenue to them. So we are trying to address even that portion and trying to get a continuum of care for secondary and tertiary. This is the kind of volume that we are energized to address. This is how it looks. Very simple 3-room setup where A&M, multipurpose health worker, and a pharmacist operate out from, totally digitally getting connected. And then they are trying to address the patient by doing the consultation, getting their health records created, and then consultation with the doctor. At the same point of care, we give medicines. Generally, we push generics. Then we have the diagnostics services where we aggregate the services through multiple diagnostic providers, standardized, and then we have brought down effectively the cost of treatment by easily 35%. We have handled more than 18,000 patients by now, and of which almost 50% of them are women. So women being the caregivers are a perfect hook for the long-term value proposition of each household that we are catering to. Very quickly, basically this is the kind of flow. We go do a lot of health camps, advocate a lot of through multimedia campaigns, and then we try to aggregate the patient. Patient walk-ins are key for us. Post that, we do the registration, consultations, and then the host of services that we can aggregate. The network aggregation is key here, where we are trying to say that standardized services. Right now, we have got Alchem Lupin as our diagnostic, as our drug partners. We have got Core Diagnostics. We are talking to Dr. Lal for our diagnostic partners. So clearly, we are aggregating the right kind of partners, deepening their supply chain network while addressing the core population. And this is, right now, we are operating at almost 300 rupees per patient per transaction revenue. It has got a good elbow room to double this entire number in a period of 1.5 years, because right now, when they were going to a Quark or a Jhola Chhap or a non-recognized doctor, they used to pay 500 rupees per transaction. So we have already reduced that transaction cost while standardizing it to the team. Quite a few players, if people following Shark Tank would have realized, recently DigiCure got funded. Prior to this, CureBay has got funded on similar lines. Clearly, everybody is trying to address fairly a large market, huge pie for many players to come in and operate in this. The barriers that would happen in future would be the operational strength and how you operate and own the patient over a period of time. I think that is the key over a period of time that will define more successful players. Some of the achievements till date, 8 operational centers we have run for almost 1.5 years now, 18,000 plus patients, 60% plus female patients. This is a good hook. We realized this while doing the operations that the presence of a female field nurse actually enabled more females to participate in this, and the cost where it was just about 300 rupees per patient is a kind of money a woman can come and pay and get treated. So clearly that is the translation that we could see. Right now we are EBITDA positive. We are seeing almost 63,000 rupees revenue. This last 2 months we have actually clocked in 3 centers more than 1 lakh rupees per center per month revenue. Our own digital stack, which actually has the customer experience map, our entire health records getting created. We are Aabha integrated, the digital platform that Government of India prescribes. We are one of those 13 or 14 players who have got the sandbox approved. And then we are trying to move this towards the AI. We are creating more interactive platforms. Till date, we have not given any app to any patient. They have to come to the platform. We have more interactions. It's a very human-centric design that we have created. Now we have started using the AI for the patients to ask questions. Our doctors would answer and then get the right kind of treatment from the center again. So this is the app that we are testing out now. So generally, operation break-even we are realizing in Q2. We are trying to accelerate this and Q2 of the second year. So we are trying to accelerate this furthermore. We are trying to
2 minutes left.
Bring it down furthermore. We are trying to raise. So we have got very aggressive plans. We are trying to set up close to 200 clinics in this by the end of this financial year. That is coming financial year. That's the target that we are trying to set for ourselves. We have got few commitments of about 100 clinics. We have a visibility around that in UP. Yeah, so we clearly saw the stage 1, the proof of concept partnerships are established. The stage 2 and stage 3 is where we are trying to focus and grow our entire storyline. Some endorsements, we have been backed by ONDC CEO right now. We have got some backing from OYO. We have been supported by BMGF. Some of the institutional funders have also supported us. There are some of those endorsements. We have got a host of advisors to us, supporting us to scale this business, not only in India, but also in neighboring nations like Bangladesh, Nepal, etc. This is a ask, like we have recently closed a friends and family round of, we opened a round for 1.5 crores. We are oversubscribed. We got almost 3 crores commitment. We are just about to close that. We are aggressively looking for a scale up where we will be chasing the pipeline of setting up next 100 centers. So this is how we are going to plan, put a lot of focus on our deepening our products and scaling up our units. I would pause here. Happy to take your questions.
And is it operationally in profits now?
Sorry?
Are you clocking operational profits?
Yes.
Per center, center-wise?
So operationally, every center operation is profitable. Once we load our HO cost right now, obviously it is not profitable.
Right.
So every center operationally has started gaining once they have crossed that 11-month mark. We have started
how many
getting
centers?
that
You said
traction.
8 centers is what you operate.
Yes.
And
Over a period of 1.5 years. We started operating from July 2021. That was the first center. Then we added 3 more centers in November 2021, and then the story.
these are rural-based centers.
These are all peri-urban based. So when we go into an area, we have some checklists that we try to tick off. One is we try to see those areas where there is no presence of doctor, proper pharmacy or RMP in 7 to 8 square kilometer area. That is the area we choose. It could be a peri-urban area. It would be a Gram Panchayat area. We are happy to go and operate from there.
These are all owned centers?
Sorry?
Are these all owned centers?
Yeah. So basically we run our own centers. We lease a property. We standardize that property and run it like a, so to say, a lower cost clinic. And you will have a proper 30-inch television there or a desktop. Everything is CCTV camera based. The entire inventory system is digitally mapped. Even a single medicine coming out from an inventory can be tracked at a center where I can see what the medicine has gone out. So clearly everything, the digital discussion or the video recording of the doctor and the patient is recorded, it is with us. So clearly that is the kind of systems we have created.
So are you using an ERP or something out here? Because when you have patients coming in, their records,
yeah,
the
we have
database.
we have our own digital system which we have created from scratch and it is running with us.
Own system which you
Yes. Actually, ABHA also requires that you have your own digital mapping. So we have mapped that.
Okay.
We are a little ahead of the curve, I would claim that. So we have created those little advanced systems than what a electronic system would be. Little ahead in terms of inventory mapping, linking them with the stockists, linking them with our footfall. So we have linked that entire cycle.
Is it the same thing which you said? You mentioned that you were the person who designed the Mohalla clinics in Delhi.
Yes. So In
So
the
was it this-
Mohalla Clinic, they have multiple systems. I'm little unaware of the current systems though, but the earlier systems were also designed in a very nimble form where the interactions could happen, but they were more physical in nature. And the cost of setting up of Mohalla Clinic was way higher. It was almost 10 times than what we are.
Okay.
So this is very cost effective. Tomorrow, if I go and scale and find right kind of entrepreneurs, tell them that this is a story, and you have kind of 5 lakh rupees, 7 lakh rupees to invest, and we will return your money after a period of 12 months. We have a partnership. We can actually strike those kind of partnerships. Though we are now just setting up our own run centers, we would like to move from this 8 to another, I would say 20, 25. We have got already commitment from BMGF for another 10. Gates Foundation has committed for 10.
Commitment from?
Gates Foundation, BMGF.
Right.
They have helped us to go.
Gates Foundation.
Yeah.
If I heard. Oh.
BMGF. Yeah.
Nice.
Yeah.
Setting up the micro clinics.
One clear challenge that we would always have, I feel, is the right kind of human resources that we need to employ. So, for example, when we went out to get the right kind of doctors into our platform to convince the larger vision and then getting them aligned and paying them the salaries and then being on our platform is clearly a thing. So, right now, over 4 to 5 setups, we have one doctor who is generally a general practitioner. The moment we move to a higher scale, we will require a good battery of doctors. That kind of commitment and that kind of agreement to work would be a challenge. That's what we envisage. But then we are also trying to how far we can digitize, how well can we digitize during this period is the key. I think that is one of the things. Thankfully, we have got good human resource base in the field level. A lot of frontline health workers who are quite trainable. Government has invested a lot of money on that. So we are leveraging that entire platform, getting them onboarded. If their average salary was 6,000 to 7,000 rupees, we are almost doubling their salaries and for the right candidates and getting them engaged. So that should not be a problem there. Second, I think is the entire supply chain network. It is quite broken in terms of certain components, let it be drugs, let it be the diagnostic part. That takes a little time when we establish. There are certain license challenges when you go to setting up of a pharmacist. That takes a little time. Otherwise, our break-even would be way more, at least a quarter behind. So that takes a good duration. So we are still trying to answer those questions and get a true answer.
Okay, just last clarification. So
Yes,
how
sir.
the UP government actually supporting you in terms of the building the
So-
infrastructure and the
So I'm an ex-banker. I worked in World Bank. I have put so many policy papers from the government of India. Proudly, I can say that. So I understand the PPP structuring quite well, working in ADB, World Bank and all. So what we have done is we have leveraged few of the platforms. One of the most useful platform right now, I think we are the first, I can claim to be first, where we have leveraged the SHG community platform. So SHGs have evolved over a year. They have formed a VO or a CLF, which literally functions like a income generating arm for the women. They have certain kind of money which is unutilized. So we are helping them using that money, getting an income source, and also helping them to operate and break even. So we are not only addressing the cause of getting a health assurance done at a ground level, but we are also optimizing their assets furthermore and getting a proper viable income generation. They are actually equity partners in few of the things. So we are in advanced talks with ICCI to design this furthermore with BMGF. So we are designing this and evolving it further. More than happy to discuss that as well.
What's your average order size?
Yeah. What do you mean by order size, sir?
Transaction value or order size?
It's almost
whatever.
283 rupees.
And what's your CAC?
It is, actually our CAC is quite low, Mr. Gandhi. CAC is less than 15 rupees.
But how do you acquire a patient?
Yeah, we do a lot of health camps, and what we have done effectively is the health camps, wherever we do, we have the patient interacting with the doctor on our platform, the entire digital platform. And there also we do certain kind of diagnostics, certain kind of medicines. So those conversions are pretty heavy. So almost 80 to 90% of these patients actually have a footfall in our setups.
So in that
already
283
we have-
rupees, how much is diagnostic, how much is pharmacy, and how much is other?
Pharmacy
ancillaries?
actually gives us almost 32% of our revenue. And
Okay.
yeah,
And these
that-
are white label medicines?
Sorry?
These are white label medicines. The brands are owned by you.
Yes, yes. No. We are not owning anything. We are more of aggregator platform.
Okay.
So we have tied up with Alchem, Lupin, and then we are putting, and then the generics of these companies are being entertained.
Okay. You have a slide on unit economics.
Actually, I did not put this, but then I can always share. In fact, I have a separate slide. I realize that the unit economics and the projections have not been given. More than happy to share that.
Sure. Thank you.
We have a unit economics, and I can share it with you for the early units which have actually shown the right results, and some of the
Actually, there are quite a number of players which have raised decent money, and recently CureBay, you know, that 50 crores, right?
Done that. BGPR has done that.
But, you know, most of them haven't been able to scale up. And they've tried franchisee model, they've tried all kinds of model. But I'm just wondering that what will make you scale up is something that I'm looking from you.
Yeah, so very, very critically, I have seen the scale up of certain of the other social sector projects related with skill development or related with the entire women empowerment movement. I had myself set up the first 3 SHGs in a remote area of Bihar. So clearly that swelled from 3 to say 25 lakh SHGs. So I am a strong proponent believer that these kind of scale-ups are possible if you have the operational bandwidth, if you understand how to operate and leverage the current ecosystems. Many players will come and many will move out because of the operational challenges. We have somewhere seen at least one clear cycle, and we are more than happy to say that we have somewhere mastered this art to own the patient. Till the time we are owning the patient and every new sentence is generating the right kind of vibes, we should not see a problem. We should always find a good operating partner. That comes with a co-founder's hunch. Yeah.
Just last thing, since you must be generating a lot of data points also. That's one. I mean, that's the advantage which I'm looking at.
Alpesh, you need to really be louder.
Sorry?
You need to be a little louder.
Okay. With this whole setup which you have, and I just heard you saying that you have your own pharmacy kind of thing, you medication, etc., branded ones. There is a potential for cross-selling certain other products. I don't know if you identified those because this is all rural.
Yes. We have added few more services, like what we realized when we create this hook for patients, the secondary care treatment in terms of, say, an NCD problem becomes quite important to be addressed. So we have started exploring. We are discussion with few of the mental illness organizations, startups, whom we have aggregated now, and we are discussing almost at 400 rupees per hour consulting fees or the counseling fees. So those kind of discussions have started. What we are trying to do is there is a solution in the market which can be provided to this set of people at a cost which they can afford. So we are trying to put that together as far as possible through a digital or as a solution which is already existing in the market. So trying to standardize and getting them at a more affordable cost. We have done the similar thing with insurance plan also. We got Bima plan, which is one of the startups funded by, I think, one of the investors here. And then we curated this entire insurance with care insurance. And then we have put it across to the market. Though it is having a very less uptake, but because there is so much of Ayushman Bharat in the market, so clearly it has got its own spin, but we are happy to say that these are the kind of solutions we are doing.
If there's a need of a specialist out there, how many specialists do you plan to have?
So the specialists also interact on using our digital platform. So we aggregate the specialist requests, and those hours and dates are fixed where the specialists come in and they advise the patient. In case wherever the referrals are done, now we have started doing the patient management where the referrals are being targeted to the nearest point to the best possible facility. That is also getting rated in our system.
Just last question. What do you do about further investigation if required, or just the patient comes in and says, "Mujhe zukam ho gaya." Take the yellow tablet or the blue tablet or whichever tablet you have, but it requires further investigation of blood tests and all. That's what you do.
Further investigation, you're saying?
Yeah, investigation.
Yeah, so that's what we're saying. Once the doctor at our bay clearly says that it requires further investigation, we have our patient management referrals with certain tied up polyclinics and all doctors.
You have a tie-up.
And then we send them physically if required. If not, our setup, we have got 4 specialists in 4 different areas who can again go through the transaction, same cost, but having a telemedicine kind of a construct. So it goes through 3 layers where the patient is confident. We want to win the trust of the patient that we are there to help them, so that the long-term value, every patient almost spends 40,000 rupees. Out of these 18,000 patients, on an average, they spend 40,000 rupees per year per household. Even 25% of this, if it is a long-term value proposition for me, I'm actually having almost 4.5 crores.
Right.
So that's the kind of thing we are looking at. It's a long-term play.
Nice. Thank you.
Thank you. Thank you, all of you.
Thank you so much, Anupam. Can we have a big hand for Anupam from Last Mile Care? All right. We'd now like to gauge investor interest for Last Mile Care, where Anupam just presented his company. Investors who would be interested in considering the investment opportunity at Last Mile Care can raise your placards. Do we have any investor interest for Last Mile Care so far? Okay, investors would like to ask follow-up questions further can raise their placards. Okay, I think there are a lot of questions to be asked, which is why we had a fairly longer Q&A this time. So Anupam, there's a bit of work to be done, so you can definitely take the questions forward. All right, great. With this, we come to the end of the last presentation. Before we kind of conclude, I'd really like to thank the organizing committee at Amit Technology Incubator, Mr. Rajaswi Babbar, Vijay Veer Singh, Tulika, Sahil, Asim sir, and the entire students who've been a part of organizing the event. So can we have a big round of applause for the organizing committee? Loud round of applause for the entire team, for keeping the event so smooth, for getting very high quality startups to pitch as well. And yeah, so big congratulations to the entire team.
But also a big clap for Sahil.
Oh,
Sahil Proti for
thank you.
doing an amazing job in comparing and moderating today's event. Very difficult to keep everyone going and on time, but you did it smilingly. And everyone knows Sahil is himself a very successful entrepreneur running a company called Livify. Give 1 or 2 lines about your journey and Livify, in case someone does not know. Give the 1 or 2 lines about what you're doing, sir.
Sure, definitely. Thank you so much for giving me the opportunity as well. So I'm also a founder of a healthcare tech company. We're based out of Gurgaon. So we're a healthcare tech company that leverages technology and process to which use a combination of technology, nutrition, and supplementation to help people in remission of their type 2 diabetes, PCOS, thyroid, obesity through combination of nutrition, supplementation, and medical treatment that there is. We've worked with over 10,000 patients in 16 states in India and 25 countries across the globe. And we were also one of the startups that were featured on Shark Tank India. And we're currently a part of the Stanford Seed cohort. And we've recently raised about 4.5 crores from various investors, Amit Singhal-ji, Gopal-ji, Asim sir being some of the investors as well as a part of our investor pool. So yeah, so if anybody's interested or would like a follow-up, happy to kind of do that later on.
Great.
So yeah, great. Thank you so much for giving me the opportunity to kind of talk about my startup as well. Thanks, sir. Thanks a lot. Yeah, so as next steps, we'd like all the investors to come on stage and get a photograph clicked with the Amity team. And post that, we'll also have a high tea session in the respective rooms which we had the lunch at. So investors can take a right from the exit and move to the investor room, and founders can move towards the left and have their tea as well. As mentioned previously, the folders have been filled with regards to interested or a follow-up from investors. So if you'd like any follow-up, so the Amity team will be coordinating follow-up discussions, and I can vouch for the fact that they do a brilliant job in terms of coordinating follow-up discussions between founders and investors. So rest assured, I'm sure those conversations will be taken care of. So yeah, great. Thank you so much once again, and big round of applause to all you guys. Thank you so much. We can have the investors come on stage, please.
While we go on stage, grateful thanks to all the investors, business coaches, mentors who are here today. 6+ hours of marathon session of hearing pitches, not easy, but was very exciting. So thank you to all of you, and please keep coming back to the incubator of Amity and Amity Universities. And great job to all the entrepreneurs who pitched today. Very interesting, exciting to hear your stories. Thank you very much.
with you.
Yes, sir.